pleased with this. There we go.
Hi guys, we are going to get started in about a minute or two. We have a bunch of people signing up and joining in right now. Hi guys, I just want to make sure everybody can hear me. If you please mute your phones or your headsets. Okay, welcome everybody. We're going to get started. I'm very, very excited to be here with you guys for what's going to be a fairly intense lecture series. And we've got a lot of great organizations and teams coming in to talk and deliver some quality education. My name is Jamil. I run a company called Chain House, and we focus on DeFi, blockchain, and AI. And I'm also a professor at Columbia Business School, NYU, and CUNY. I will be your host in conjunction with the rest of my team, Michael Dacampora and Raymond Chen, who will be supporting you guys through this journey over the next few days. So I want to get started first. What I want to say is thank you to you guys who have taken the time out to come and join us and participate in this event. Our RSVPs were through the roof. We got over 1,200 or 1,500 RSVPs collectively across all the different channels. And we expect a large crowd, especially through the week, with a lot of the stuff occurring with Asia later in the evening. We expect a lot more people joining at that time. I also want to thank all the teams and organizations, the DeFi protocols and organizations that have sent their people to come to talk to us. It wasn't an easy process to get these teams to commit. Many of them are very, very busy writing code and producing the next generation of DeFi, and getting them to commit and take the time out to come talk to us has been kind of an amazing process and kind of I feel an amazing amount of gratitude towards these groups, including Consensus, Algorand, Decrypt, DeForce, Compound, and Chainlink, MetaMask. All of these teams have supported us through this process, and they will be coming and sharing an incredible amount of knowledge that's not easily available anywhere else, almost not available anywhere else, that we will be able to get over the next a couple of days. So I'm very, very excited about that. We've got a very, very busy schedule for the next few hours into the evening on the East Coast, and then we will continue tomorrow morning on the East Coast and go through the day with back-to-back lectures, almost taking really no breaks. Basically kind of a lightning talk, one after the other. So just a couple of housekeeping things. Our general format for this conference is going to be, we will have 30-minute sessions. Each session will have a speaker representing some team or some organization or some group. They will speak for about 20, 25 minutes, and then we're going to allocate about 5 to 10 minutes for questions from all of you. If you want to ask a question, I ask that on the right side, you'll see this menu bar that says questions right below the chat box or the chat icon. Click on that and enter your question there. The community can upvote that question. And so we will pick the questions that are most upvoted and process them and ask them to the speaker. So that's going to be our general process and procedure. So we'll have these very quick lightning talks, 20 minutes. The speaker will come in, provide their slide deck and information, and then we'll go into Q&A. We also have 2 panels that we'll be doing during the next couple of days. One panel is specifically on DeFi investing. If you want to go in and invest in a protocol, what does that look like? If you want to go and do yield farming, what does that look like for yourself? And we've got a stellar panel with some great insights coming out of that panel. Scheduled, I believe that's for tomorrow. And then we've got another panel on DeFi trading. With people who are going to tell us how we can potentially make more money trading DeFi and what that looks like in the future. So very, very exciting stuff. Very, very excited to have everyone here to participate in this. Okay, so so that's quick housekeeping stuff. One or two more items. We will distribute the slide deck. If you've registered via the Eventbrite, the slide deck for all of the presentations will go out, or as much as the speakers give us their presentations, all of it will go out in a single compiled PDF. So we will compile it and put it out hopefully by Monday. It'll go out to everybody that's RSVP'd, and you'll have a copy of that. The video for this we are recording this. However, the video is very, very raw, and we do need to make sure certain people sign certain releases. Once that process is done and we do go through a post-production process, we're going to push those videos out, and we're going to put it in an app that we've created called Attaché, and it's basically an education app, and all the videos will be available there. You can kind of sort and filter and search through via various topics, and it'll be available in a few weeks. So after our post-production process is done, we will get to the videos as soon as we can. So we're going to get started. What I'm going to cover very, very quickly before we get into our next speaker is a basic overview of the state of DeFi, where DeFi is today. And just to get people familiar with DeFi, we get a lot of questions around what is DeFi, how do I get involved in DeFi? I don't understand DeFi. And for a lot of people, DeFi, even for blockchain people, DeFi is very, very complex and new, and there are a lot of companies that they haven't heard of, protocols and algorithms and approaches that they've not heard about, and they are kind of somewhat bewildered. And part of what we want to do is try to kind of help address that. So we're kind of setting a baseline today around the state of DeFi. Where is DeFi? Where is it going? Where is it at? And then we'll see that with the next set of speakers in the next few days, what they're working on and how they're breaking new ground and innovating in the DeFi space. And as you will see, there's some amazing work that's occurring in the DeFi space, right? So I want to talk about the state of DeFi. This deck that I am going to go over will be available at that bit.ly link by the end of the talk. It will be available there. It should be available there now, but it was updated, and the most recent version will be available later tonight. So if you wish to download it, you'll be able to get it. And again, we will send out a compiled version of all the decks by Monday to everybody. So very quickly, what is DeFi? A lot of people have heard the term, and a lot of people have not. If you walk down the street and tap somebody on the shoulder and ask them, have you heard of blockchain? They might say, do you mean Bitcoin? But if you say, have you heard of DeFi? They're going to look at you strangely. If they'll think that you're talking about defying gravity or something like that, the word DEFi. They won't know what you're talking about. The DeFi world is a very, very small world of a very small number of people that are very familiar with it or somewhat familiar with it, and that is changing. But a lot of people are still trying to understand what DeFi is. Obviously, DeFi, for those people that are familiar with it, know that DeFi stands for decentralized finance. That's kind of a given. But in searching for a really good definition, I like this definition by Andrei Dragos, who basically says DeFi is the movement that he calls it a movement that leverages decentralized networks to transform old financial products into new products that have certain properties, right? They're transparent. They run without intermediaries. And I would go as far as to say that we're moving beyond the transformation of old financial products. We're creating new financial products that do not even exist in the old world, right? And so not only are we transferring the old world into this new world, we are saying, hey, there's new ways to do things that the old world has not even thought of or hasn't done. Obviously, we're still based on fundamental financial principles. That makes sense. But as you'll see over the next coming days, some of that has been turned on its head, right? Where you find situations where a borrower is making a yield instead of a lender, right? And we see some of that dynamic occurring in the market. So this is how I would define DeFi. And this is a great paper to read by Andre around what DeFi is. But what's the problem with DeFi? DeFi has a significant education problem. Part of that is something that we're trying to solve here with this talk. We can see, for example, there's a paper written by Imperial College and Cornell University. The pace of change in DeFi has been very challenging for newcomers. And when we say newcomers here, the reference here is to people that are already in the blockchain space or already have financial understanding. They understand trading. They might understand fixed income trading, might understand commodities trading. And even for them, this is still a difficult and challenging thing to absorb and learn. Even just the basic features, right? Just the basics of it is difficult to learn. And we are... our goal here is to help change some of that and get more of the DeFi out to the public so that more and more of the public can understand what it is and get more acclimated to it. Because I believe DeFi 10 years out will be the norm. That's how we're going to be doing business. And those who are in the know now stand to reap the benefits of this kind of disruption and significant transformation that's occurring. And so the transformation is going to occur with or without me. There is, even if people don't understand it, this is such a gravitas of a situation. This is such a powerful movement that it will happen regardless of the fact that lawmakers or the general public understands or not. This is going to move forward. Obviously, better that we understand it and it involves us and we are involved with it to take advantage of its growth. But it's going to move forward regardless of the general public's understanding of it. We hope that the general public's understanding of it increases over time, and it will need to. But the cat is out of the bag, out of the proverbial bag, and we are expected to continue to move forward, right, on this. This is continue to grow, right? So some simple properties of DeFi for those that are very new to DeFi. I just want to cover a few different properties, and we'll look at quickly a paper on how that paper categorizes different DeFi protocols, and just we'll look at some numbers that measure what's happening with DeFi before I wrap up this talk. One, a paper by the University of Basel, Fabian Shar. DeFi is still a niche market, but he specifies certain properties of DeFi. One is efficiency, two is transparency, at least at the code level. The smart contract code level is open source. Accessibility, almost anybody can access it. And what I really like, composability, right? And we'll talk about composability in a bit. That is very, very powerful. In a lot of ways, it's maybe a major outcome of decentralization, right? So composability is what we might call in the old tech world integration between different companies, integrating their IT systems. Here, composability is similar to that, except that it can be done more easily because the source code is open and anybody can take one protocol and potentially integrate it and have it interop with another protocol. Whereas in traditional markets, that requires significant conversations between different organizations, right? So some simple properties of DeFi: one, it's global. Once it's available to anybody. That, some kid in a village in some remote country that really may not be well connected can start to engage with a DeFi protocol, can put money into a protocol and generate yield for him or herself. Somebody inside of a village, as long as they have access to a smartphone and somewhat of a internet connection, can engage immediately, right? Within a couple of minutes. There is no need to necessarily walk into a branch and open and fill out paperwork to open up an account anywhere. It can be done immediately. The market is 24/7. It never ends. There is no business hours. The business hours is every time and every day. It's open. It's transparent. We find transparency through open source code, and the fact that blockchain is open source and the blockchain is open in terms of the transaction ledger and available for anybody to inspect. You can expect faster settlement times. If you're familiar with the equities market, at least in the US, T+2. If I trade, the settlement of the trade is technically going to occur in 2 days. That's not necessarily the case with blockchain. I can expect to have faster settlement time. I can fractionalize things with a very large denominator, right? So the penny or the 1 cent is not my limit. I can go down to 100 millionth of a penny if I so choose to in whatever protocol I have. Lower friction if I want to move money around, and zero to low infrastructure code cost. That's a big deal. I want to deploy an application. I have an idea to build something. All I've got to do is invest in building the economic model and a smart contract, and push that out onto the blockchain. I don't need the cloud. I don't need to put money into infrastructure. I just need to focus on the economic model of the protocol that I'm building. And that allows me to pour more of my money and more of my investment around what really matters, which is the protocol. And less of my money is spent on worrying about servers and memory and cloud and all of that. And because I'm able to do that, you have people, and we'll hear stories of people who have had regular jobs, just explore smart contracts as a hobby, and before you know it, their smart contract has become a leading DeFi protocol. For example, Uniswap and SushiSwap are examples, and I expect SushiSwap to be joining us within the next 2 days to talk about that. So because of that, there are significant benefits, and blockchain technology has the potential to reduce transaction costs. Economic costs, not just gas and transaction fees, but economic costs. In order for a bank to do transactions, there is their transaction fee, but then there's this underlying economic cost, operations, technology, and all this other support that has to go with that. And blockchain can reduce the total economic cost of a transaction, which means potentially, theoretically, transactions will scale from an economic point of view better. than they would, let's say, with a centralized organization that has massive amounts of support behind it. This is not to say that's a bad thing. This is just to say that there's a difference. And we'll see in the future how support around somebody trading on DeFi protocol needs support, and what their options are, which would be something needed. Now, composability is a big component of this. You'll find through the next couple of days how one protocol can interop. The tokens of one protocol can potentially be used inside of another protocol. How I can take MakerDAO tokens and park them with a borrower or lender system, and all of this interoperability I can get fairly extensively done, and that's called composability. And we'll see over the next couple of days how a lot of these protocols are doing this. I think this is not talked about as much as it should be. This is a huge benefit and a huge value add that will take us leap us forward light years ahead of other ways of doing business that are not so decentralized. Right, so composability is going to be a big part of DeFi in the coming years. And so, what about regulation and DeFi? Right now, there are a lot of DeFi groups that are anonymous. We've reached out to some of them. They've refused to talk. Some of them are willing to talk, but don't want their names disclosed. They don't want their video. They don't want to come out in video. They're concerned with regulation and things like that. So regulation will be a concern. We want to see where regulation comes in on a bunch of different topics, and we have some people that will be talking about this aspect about regulation. But one thing to note about regulation and DeFi is that it's entirely possible to build regulatory rules inside these DeFi smart contracts. And this is a point made in this paper where we can see building regulatory approaches into the design of the DeFi is a possibility. And I think we will start to see some of that over the next coming years. How can a smart contract self-regulate? And obviously self-regulation, there's different opinions about an industry self-regulating, but can an open smart contract where its code is openly available and visible and inspectable, can that smart contract regulate itself in a way that is in conformance with regulatory bodies or authorities and operate? And I think that we're going to see some of that occurring in the next few years. Okay, so where is DeFi today? Just two key measures. There are two ways to measure where DeFi is quantitatively, or I have two measurements. One is you can talk about the amount of money parked inside of smart contracts. For example, if I'm lending my cryptos to somebody, I can park those cryptos in a smart contract, and we can calculate the total sum of all the value that's been parked or staked or loaned out, and that's sitting in smart contracts. And we can see over the past couple of years, there is a massive spike in the amount of money sitting in these smart contracts, $40 billion worth. And most of this increase has occurred over the past roughly 12 months. And that's due to a multiple number of factors, includes COVID, includes the increase of the money supply across a bunch of different companies a bunch of different countries because of COVID, and this kind of flight away from fiat has been a contributing factor. So with this sudden spike, and in a lot of ways, this is the early stages of this. Is this sustainable? We'll see. I believe some of it is sustainable, and we'll see how far this can continue. So we're seeing about $40 billion in value locked up in contracts. And only October, just a couple of months ago, we had a quarter of that. We had $10 billion. So we kind of quadrupled within a few months. And there doesn't seem to be any let up on this as of yet. Right? There doesn't seem to be any reason why this is going to slow down. Okay, and then the other measure that we can typically use is market capitalization. And if you go to CoinGecko, you can see some of the major DeFi protocols that have issued tokens and their market cap. And we can see, and we've got a bunch of these coming and talking over the next few days, including Chainlink, Compound today coming in. And the total market cap here is past, it's approaching $80 billion dollars. Small compared to, let's say, the U.S. equity markets, but very indicative of the potential of where this is going to go. So we've got one measure where it shows $40 billion of value locked in smart contracts, and then we have another measure of investment money going into these DeFi tokens and holding these tokens and the valuation of these tokens, right? And so these are indicators of growth. You can see the trajectory of this is significantly upwards, and we don't really see at this stage why this would potentially slow down. And it doesn't necessarily correlate with Bitcoin prices, right? So there is not necessarily a correlation with Bitcoin prices, but it's still too early to say what that correlation looks like, right? So a couple of different use cases. Where is DeFi being used? And then we'll have we'll switch over to our next speaker. DeFi is being used in crowdfunding. People are familiar with ICOs, right? The concept of ICOs and STOs and all of that, right? And that's been a big part of initial early stages of DeFi. We see it in asset tokenization and stable coins. And now we kind of see it in money markets like Uniswap and SushiSwap and Compound. Compound is like money market exchanges like Uniswap and SushiSwap. And then we see it in prediction markets. We have a prediction market coming and talking. We have Gnosis, and this is for like betting. We have oracles, like organizations like Chainlink and Zap, and then derivatives, which I think eventually will become the norm, like DXDY, that allow you to trade and create brand new instruments based off the prices of other instruments. Right. Then now there's a paper out there written called Decentralized Finance or Systemization of Knowledge, Decentralized Finance by these authors listed on the bottom that do a different breakdown of the different DeFi protocols. An interesting read, I put it up there. They quantify the level 2 rollup protocols as a different category: derivatives, portfolio management, stable coins, loanable funds market, which is basically money markets, and then privacy preserving mixers. And so different ways of categorizing DeFi, but it's clear that DeFi has multiple tentacles that have different types of groups and people working on different ways of doing finance, right? Different aspects of finance. Okay. All right. So I'm going to wrap that up. I'm going to see if our next speaker is available. And we're going to pass that off to the next speaker. Okay. Thank you, guys. If you have any questions, just pop it on the chat, on the question box. Our next speaker is going to be from Hedera. It's going to be talking about Hedera hashgraph and DeFi with that.
Hi, can everybody hear me?
Hey, David. Hey, Donald.
Hi,
Hello.
Yep,
Hey, how are you?
good. I am happy to share my slides, but I believe there can only be one at a time.
Yep, I'm going to let go and hand it over to you. Welcome, by the way.
Great, thank you.
Sure.
Okay, let's get this on the road. Good afternoon, everybody. My name is Donald Tebow. Well, it's at least afternoon here in New York City. I'm the Director of Product Management for a company called Hedera hashgraph. So I'm very excited to talk with you all today about what we're seeing from many of our users in the tokenization and DeFi space. We, as an organization, work with some of the largest organizations in the world, and one of the things we've found fascinating over the past 6 months and looking into 2021 is how these organizations are learning from the trends in DeFi that were started over the past 2 or 3 years and beginning to put them into practice themselves with their own use cases and with their own opportunities, which is where I'm going to focus my discussion today. Now, just a bit about Hedera hashgraph. We view ourselves as building on the innovations that occurred with networks like Bitcoin and Ethereum, and particularly by focusing on the ability to have performant transaction processing with fixed low fees. We hope to provide a new opportunity for different asset classes to be tokenized, payment systems to leverage stablecoins, and real growth to be achieved at both an enterprise and consumer scale. Now, we are optimized around these 4 differentiators: performance, supporting 10,000 transactions per second; security, asynchronous Byzantine fault tolerant, truly decentralized consensus; stability of both the network in its ability to add new features and improvements, as well as never fork; and governance by the Hedera Governing Council, focused on growing the network over time, and particularly focusing adoption around things like tokenization and the use cases I'll talk about coming up here. I mentioned these differentiators previously, so really I'll just fly through some of this to get into the meat of what we're seeing in the tokenization space, but all of them leverage these advantages from a technical and governance perspective in their work on Hedera. And last but not least, as intro, when we talk about the Hedera Governing Council, these are the organizations that actually govern and operate our network today. So it's organizations like Avery Dennison, but also Google, IBM, Standard Bank, Boeing, and more, from intentionally diverse geographies and industries, so that we always ensure the decentralization of both operation and governance of the Hedera network. You'll also see that many of these organizations are also pursuing their own strategies in tokenization or in DeFi through their work on Hedera, and that's what we'll focus on today. So taking a step back to now look at the tokenization space as a whole, I think those of us who've been in the industry for years now have seen that there's been different trends of promises and fulfillment around tokenization. But what we've really started to see over the last year and into the projects that are being built today is that many of the barriers, whether it's from a technology perspective, a governance perspective, regulator perspective, are starting to fall down so that enterprises and consumer scale applications can embrace tokenization through things like DeFi at scale and in production. So we always like this quote from Robert Greenfield indicating that today you could have tokenization of different asset classes, but if you look 5 years down the line, almost all of these will be tokenized. Because they allow for things like efficient markets and new revenue streams to form for the asset issuers, this opportunity is really massive. So if we wanted to first define tokenization, we refer specifically asset tokenization to the process of converting assets and ownership rights into digital tokens recorded and tracked on a distributed ledger. Now, this is slightly different than just a, say, governance token for a DeFi protocol, but represents the actual ownership of some underlying financial or physical asset. It could also represent ownership to some digital collectible or physical collectible, represented with, say, a non-fungible token. But it's really with this definition that we've seen the majority of use cases on Hedera be built. At a high level, the value for these asset classes can depend on which one is being tokenized, but across the board, we see benefits around improved liquidity, reduced cost, and faster settlement. So many of the advantages that were talked about by the previous speaker for DeFi. If we then look at what the addressable market is, today we see an opportunity for tokenization in a number of different asset classes, whether it's existing cryptocurrency tokens, stablecoins, or traditional financial assets like ETFs, corporate debt, corporate equity, as well as non-traditional assets like gaming, collectibles, or even energy, real estate, and land. Tokenization can be a process by which these asset classes become more liquid and more freely exchanged in an open market. And across the board, what we're seeing with different organizations, especially those on our council member, is essentially organizations seeing DLT as the process for embracing this future of finance. Now, it's far more than just the tokenization market. If you look at the crypto market as a whole, it supports over, I think today it's back over $1 trillion market cap. But even that pales in comparison with the global stock market, which is 110 trillion and growing, and really represents the long-term opportunity of tokenization and the long-term disruption of DeFi protocols and products. So what have we started to see in the tokenization space? So first of all, we recognize that there's a number of challenges for platforms today. We see fluctuations in transaction fees are impeding stability of the applications. Performance limits adoption for things like micropayment use cases or high-functioning financial markets. There's a constant threat of network forking that could harm the asset value. And of course, the uncertain regulatory environment and sometimes a lack of accessibility for the technology as a whole that can limit adoption by both enterprise and consumers. So it's some of these challenges that we've set out to solve by building products and services directly targeted towards those large-scale applications, be they consumer, individual developer team applications, or large enterprise applications. What we see as the key differentiators, especially for a business, is they want to have the ability to define and issue their own token natively. Maybe it's representing a stablecoin, or maybe it's their loyalty points program for their enterprise B2B system. They want to have performance that's high in the thousands of transactions per second and low predictable cost. In the case of Hedera, it's less than a penny. And also, they want to embrace many of those core tenets around DeFi and decentralization, where any user can hold and transfer their tokens directly from their account to another user's. And they want the ability to enforce things like compliance, for instance, KYC or AML. And so it was in using these requirements that we focused on building our Hedera token service to support their adoption. Now, in terms of the adoption thus far, we've seen a lot of different use cases across the board. Stablecoins, whether pegged algorithmically to an underlying asset or through collateral. Securitization, supporting the securitization of things like corporate equity or debt. Lending in the DeFi space especially has really exploded for cryptocurrencies and stablecoins. We've also started to see interest around payments and central bank digital currencies. So whether that's leveraging a stablecoin or a central bank issuing their own token, this is a really large market that's been growing recently. And of course, many of those use cases outside of financial services have been even quicker to embrace tokenization. We've seen an explosion in gaming and collectibles for things like NBA Top Shot or other NFT use cases. We're seeing supply chain increasingly as a place where businesses will tokenize goods in their supply chain for greater traceability and visibility. We've seen the support for individuals issuing their own tokens, maybe representing loyalty to their platform or their content. And last but certainly not least, we've also seen an incredible amount of interest in the sustainability and ESG space, focused on how to promote more efficient, more liquid markets for things like carbon credits, energy credits, and those focused on sustainable environmental practices. So to call out a few of the organizations that we're working with in the space, one of our earliest examples was a council member called DLA Piper, one of the world's largest law firms. DLA Piper launched a platform called Toko, which built a layer 2 network which allows a set of permissioned entities to issue tokens for new asset classes. They support issuance to services like the Hedera token service, but also different layer 1s to support things like interoperability, and are laser focused on those asset classes which can benefit from increased liquidity and revenue streams. So their first example was tokenizing a piece of artwork that had been fractionalized and sold to a set of investors. They, of course, said that the most valuable piece was the horse's ass, but you'll have to take that for their word on it. Now, in addition to DLA, we're also working with DEFiCON, one of the largest payment companies out of Australia, who's aiming to create a more streamlined, efficient payment experience for micropayments on the web. In their case, they want to leverage a stablecoin, so it's fixed to the value of their underlying currency, to support real-time payments from consumers to media providers to get around things like paywalls and friction-filled subscription options. For DEFiCON, they really see the value that Hedera brings from a high throughput and low cost issuance model as most valuable to their use case. And of course, we're also working with organizations more laser focused on the DeFi space. So Suku is building a platform which not only supports issuance of NFTs, representing things like collectible sneakers tied to RFID chips in the sneakers, but are also building a platform which supports provision of borrowing and lending services or some of those DeFi use cases to different supply chains across the globe. And they leverage Hedera, again, for issuing their tokens so that all of the tokens are existing and traded on a layer 1, which is publicly visible and scalable and easily integrated with an ecosystem of wallets, exchanges, and custody providers. So these are just a few of the use cases that are being built on Hedera today from some of our council members and other large organizations. But we've seen an even larger population of users from just startup developers to individual developers. So we recently had our Hedera 21 hackathon that had hundreds of projects, many focused on building things like browser extensions for an easy integration, or a DeFi borrowing and lending protocol, or a platform for issuing a social token for any creator or content provider to start monetizing their content. And our goal is to continue to enable this tokenization for the masses so that they can control their digital and economic lives in what we see as the most decentralized and future-proof platform going forward. I'll just mention quickly, we recently announced our Hedera token service, which allowed many of those requirements to be met, like having configurable compliance, scalability of token issuance, low predictable fees, so creating a token for $1 and paying less than a penny per transaction, built-in governance, so you could have multiple parties fulfilling roles like supply management or compliance, and also leveraging a native token issuance model where a developer wouldn't even need to program a smart contract, but could simply issue their token natively to the network. I'd be remiss to not end by mentioning that it's not just us working on driving tokenization in our ecosystem, but a whole set of custody, wallet, explorer, security and audit, SI exchange, and developer tools and council member partners helping to drive adoption of tokens on our network. And for us, this is our core focus. How do we continue to build and grow this ecosystem in a decentralized manner so that tokens issued can be easily adopted and scale for their intended use case and business? So I'll stop there, maybe just to turn over to some questions. And of course, happy to follow up if anybody's interested in learning more, which
Sure.
you can get in contact on our Discord.
Fantastic. That was great, Donald. We do have a couple questions coming in. One is, this is from Thomas Huff. How will Hedera's fixed low fees compete in the event of a quote-unquote cheaper transaction fee via HBAR price?
So one of the design decisions we made is that fees on Hedera are fixed in US dollars. So we have a fee set in $1 for creating a token. Now that's denominated in HBAR, but the network manages that exchange rate between US dollars and HBAR so that a user always has the real price in USD for their application. So it's very scalable over time, even with fluctuations in the value of HBAR. And additionally, we also can dynamically update that pricing schedule with the decentralized council decision making so that if the cost needs to be lowered for certain users, we can easily do that as well.
Fantastic. Donald, I have some questions. Can you speak a little bit about Hedera's performance, especially in comparison to, let's say, Ethereum? What is it? What do we get? What do we lose with Hedera?
Absolutely. So Hedera really was inspired by the invention of the hashgraph consensus algorithm. Now, that algorithm does two things that are absolutely critical. First is it's an asynchronous Byzantine fault-tolerant consensus algorithm. What that means in layman's terms is that every node participates in every round of consensus. So there's no concept of a leader or small group who can corrupt maliciously or accidentally the network order. It's truly decentralized. Because it also leverages a DAG, that means that it's an efficient state size, so it can more quickly process transactions and come to consensus. So we support 10,000 transactions per second on the mainnet today with latency in a matter of seconds. And for us, latency means finality. So there's no concept of a reorg messing with the transaction order.
Fantastic. Thank you for that. Another question from Mark Spiegelman. Great stuff. Which industries do you feel will be the early adopters? Real estate, art collectibles?
So I think one of the first from an enterprise perspective, especially given some of the regulatory moves recently, will be financial services embracing of things like stablecoins for payments. Now, that's opening the aperture for different entities to explore token issuance themselves. So we think it'll be some of the non-traditional asset classes like maybe real estate, artwork, collectibles like that, as well as the whole ecosystem of DeFi protocols, which are looking to build liquidity and tokens for a far greater multitude of use cases.
Great, fantastic. Thank you so much, Donald. Really appreciate it. Yep. And some people are asking for the deck. I guess we'll get the deck from you. And as a promise to everybody, we're going to compile all the decks and send them out hopefully by Monday, and just put it all into one big fat juicy PDF.
Fantastic. And for many of these use cases as well, you can go to hedera.com and see much more detailed pages about what they're building, testimonials from the people actually building things like the Toko platform, as well as in some cases, links so you can join them and use those applications yourself.
Fantastic. Thank you so much. Appreciate it.
Mm-hmm.
Okay, great. Thank you. We're going to have next Alex from Heatmap coming in. Let's get Alex up here.
All righty. Thanks so much. Have a good day.
Thank you, Donald. Thank you.
All right.
Hey, Donald, just please release the share.
I think I did, or at least clicked the button too, but let me know if that didn't work.
Yep, we're set. Hey, Alex, how are you?
Hi, Jimmy. I'm good. Thank you for having me on today.
Sure, great to have you here. So you know how to you have a deck, right? You're gonna go over a deck.
Yeah, I was actually going to do a live presentation of our site and go through some trades and looking at the portfolio management. We don't really have a deck. We just have a one intro.
That's even better. That's exciting.
Yeah. Hold on. Let me just figure out how to share screen. Share screen is choose application. Okay. You got it. is it sharing?
Yes,
Okay,
yes, we see it.
Okay, all right. So I just wanted to go over our little agenda. So I'm Alex, founder and CTO of Quantify Crypto. We were founded in 2018, and we wanted to be like a Bloomberg for cryptocurrency. And at the time, DeFi wasn't really a huge thing, so we designed just an interface front end. And then we got into DeFi later in this year. So I started out trading on Uniswap in like June, and I thought it was very clunky, and it lacked a lot of like the features normal centralized exchanges had, such as like showing your balances and your order history. So we decided it would be great if we could take our existing like terminal.
Hey, Alex, I think you broke up. Hey, Alex, I don't think we can hear you. Okay, I think we lost Alex. Let's give him 30 seconds to try to get back in.
No. That's...
Hey, Alex, yeah, we lost you for about 2 minutes.
You can hear me now, though?
Yeah, we can hear you now. You were saying something about Uniswap being
Yes.
having no order history, no trade history.
Yes. So when I first started Uniswap, I didn't it was very clunky, and I couldn't see my orders or trade history. So we decided to take our existing platform and integrate that with Uniswap. Am I still up, or did I crash again?
You're
It's saying
screen sharing.
it's not screen sharing. Oh,
Yeah, we don't see share.
yeah, it's saying AirMeet is crashing, becoming unresponsive. I'm sorry. It's I'm gonna try rejoining from a different tab.
So you experienced these problems with Uniswap. I guess the user interface, right? Kind of like the ability to like interact with Uniswap, and that led you to come up with a heat map, right?
Yeah. Yeah. I'd love to screen share it, but it's saying AirMeet is has become unresponsive. You mind if I jump out and join back?
Yeah, go for it. So I do have
Okay.
this share. I do have DeFi map.
All
Heat map
right.
share.
I just got back. Can you hear me? No.
Yeah, we can hear
You can
you.
hear me?
We can hear you.
Okay,
Yeah.
cool. All right, so I'm gonna connect my wallet. Sorry for the delay. I don't know. Air meet. I don't know what happened. All right, so you can see this now. I need to screen share. Okay. All right, so now can you see my screen? Okay, so I skipped the step. So here's our DeFi homepage. I clicked connect to wallet, and this takes us to our portfolio page. So we designed this really so that people would have a one-stop shop interface to do like the most basic thing in DeFi, which is trade on Uniswap. So in our interface here, you can see your portfolio balance up at the upper left. We've got some info about Ethereum here, such as the Ethereum price, the recent gas prices, and this little heat map here shows your balances, where the tiles are proportional to your holdings in that coin, and they're red or green based on if they're going up or down. So I'll demo how easy it is to perform a trade on our site and how we think it really will help people who are new and know nothing about DeFi can really just do the basics. So when I clicked on that sushi tile on our heat map, it took us to the sushi swap page. So as you can see, this is the pair page for sushi token and wrapped Ethereum on Uniswap. Right here, it shows the total liquidity available on Uniswap for the sushi WETH pair, and it shows the price of sushi against WETH as one sushi is 0.019 WETH, or one ETH is 91 sushi. So I don't want to buy sushi here. I want to sell sushi. So I'm gonna this widget right here, by the way, is a Uniswap iframe, and so we have it set to populate to the coin that you click on. So I'm gonna sell my sushi right here. I'm gonna swap. And damn, these are high fees, but I want to gas fee 348. That's ridiculous. I'm gonna do 250, which is still expensive, but I want it to be seen here. So this is now our transaction is pending. And if we go back to our portfolio page under, we have these tabs right here. So this is under the positions tab by default, and this shows a list of the assets that you're holding. And if you click on this link, you'll go to the pair for it. And if we go over to the transaction tab, you can see your trade history. And so this shows the time that your trade took place, the tokens that you were swapping with. So the most recent trade was a quick swap token. Hopefully Sushi will fill in here soon. And the token you sent in to Uniswap, the token you received back, and the transaction value at the time. And so you can look at your history by increasing the rows per page. You can do 15 or all, and go through your trade history. And in addition to having a portfolio page, we have this heat map here. And the heat map is designed so that any people can see what's going on Uniswap with like a whole like bird's eye view of the entire market. So right now, each of these tiles is a pair on Uniswap. So the wrapped Bitcoin, wrapped Ethereum pair is the biggest. And we have a special formula set up to scale the tiles based on liquidity, like scale up the smaller tiles and scale down the bigger ones. Because if we went by just raw liquidity numbers, these top pairs would impose on everything else. So I'm going to show you that we can have up to 500 750 coins on the heat map, but I'll just show a 200 coin view. And from here, you can mouse over the coins and get some detail about how much liquidity they have and what their prices are. And so, yeah, if you click on one of these tokens, you will go straight to the trading page for that pair. So I'm going to click on what looks interesting. heard about this unfederal reserve token. I've heard a bunch about that recently. I don't really know what it is, but I'm just going to check it out. Let's see. My swap for sushi has been completed, it says. So I'm just going to show you what it looks like to buy. So I clicked on unfederal reserve token WETH on our heat map. And so now here it's showing me the price of 1 ERSLD is 0.0001 WETH. We can zoom out our chart to see a more longer term view of this. And it looks like it's really in a dip very, very hard right now. So I'm just going to do I'm going to do a 0.25 buy. It's recommending a lower gas fee. I'll go through this. And it said that my sushi transaction confirmed, so I'm going to go back to our portfolio page here. And and if I go to our positions, you'll see that it's updated. There's no more sushi on this little heat map, but the Ethereum is bigger because we have more Ether now because we sold the sushi. And if we go to transactions, we'll see that at March 3rd, just a few minutes ago, we swapped 100 sushi tokens for 1.08 Ether, which was for $1,717. And so one of the other tabs that we have here, in addition to positions and transactions, is deposits and stakes. And so this, we crawl the Ethereum blockchain and look through different known like top DeFi staking contracts and get the user account balances that they have in there. We don't allow staking from our website yet. We're still new to DeFi and haven't really implemented that, but it's a good thing to have. So now I'm going to go back to our heat map now that we've maybe this has gone through. The other transaction hasn't gone through yet. Okay. So I'm going back to the heat map really quick. We can also do a filter. So if like you want to search for a specific coin, we recommend like setting the filter. You can set it to 750, but then let's say you only want to see like coins that trade against wrapped Bitcoin. So I can type in WBTC, and now I see a heat map of only pairs against like wrapped Bitcoin. Or let's say you want to see what's trading against USDC stablecoin. You can type in USDC, and these are all the USDC pairs. And so what the colors on the heat maps mean is red means that liquidity is leaving the Uniswap pool, and green means that the pool is gaining TVL. So it's a good way to just see, like this coin is like getting more people's attention versus this coin is like losing attention. So the last page that we have on our system here is called the Trading 101 tab. And so this is just some of the most basic tutorial videos we found for people who don't know anything about DeFi. We want them to just come to our site and be able to learn like the basics, because we think it's great to like build a product, but if your users and don't know what it is, like it won't be valuable to them. So we have like what is DeFi video, which goes over beginner concepts of DeFi. What is a DEX, where decentralized exchanges is explained. What is MetaMask wallet, made by Consensus. So, basic how to set up a MetaMask wallet, how to do that. A review of Uniswap, and some more tutorials about like liquidity pools and yield farming. But we view the Trading 101 as just the most basic. You've never done DeFi before, like these are the videos you should watch to like get the basics, so you'll be able to do the stuff on our site. And so our last tab here is called Crypto. and this takes us back to Quantify Crypto, where we started. And so I'm just going to give a really brief overview of the features we have here. This isn't really a DeFi specific site, but it's more of a preview of what we want to be moving to in the future, to take this platform and really put more DeFi data in it, because right now it was designed to take data from centralized exchanges, so we want to change that into DeFi. So we have this coin screener page, which allows you to sort coins by things such as performance on the daily or weekly percent changes, or 30-day or year to date. And so we want to take this system and also apply it to DeFi as well. If we click on a coins page like Polygon, for instance, we have a lot of dials and stuff about technical indicators. I'm not really going to get into that, but this is just more of a preview of our DeFi terminal. Will look a lot more like this, because the coin pages on here are kind of a little bit bland. So we're going to look to add some more spice into those. And yeah,
We just want to bring great features to DeFi.
Yeah, our main goal is to take all of our existing features here and bring them into DeFi, so that people can just do the bare minimum as easily as possible. Yeah, I have to. And so yeah, clicking on the DeFi page takes you back to our DeFi page, and it brings you there.
Connect to wallet and show last transaction.
And then so just going over everything one more time. Clicking connect to wallet, checking our transactions. And so the second trade that I did earlier of buying on Federal Reserve has cleared, and it's now reflected both in our transaction tab and in our little heat map here, and our positions page right here.
Great.
Yeah, I guess I can take some questions now, I guess. I know I'm supposed to talk longer, but I went over kind of a lot.
Yeah, I mean, it looks fantastic. So right now, I guess it's only for DeFi that's on Ethereum. If your tokens are something on another chain, that's probably going to come later, let's say Algorand or anything like that.
Mm-hmm. Yeah, that's a future thing for sure.
Future thing, right. Okay. Okay, anybody have any questions? Do you guys have an API? Or can we put do you have a web widget? Hey, I want to smack on a web widget somewhere on my page.
Yeah, we do. We have a widget for our heat map right now.
Oh, nice. Yeah.
This is the HTML code you'll need for it. It hasn't been DeFiified yet, because we the DeFi site that I showed you, we only released that on Valentine's Day, and so we're still coming out with the tools. But we will have a widget where you can put a DeFi heat map that will then take you to a Uniswap trading page that anybody can put on their site.
Right. So this is going to be free. Is this that you plan to how do you make money off of this? What's your?
So we're planning on having it free. We will have some gated features, but that won't happen until the future. It will probably be a maybe $10 a month subscription, I'd say. Mm-hmm. Not very. We're not going to make it expensive to do the basics, but if you want to do advanced analysis of on-chain metrics for every coin, that might be a higher price.
Right, and so your data that you're updating this must be, you've got all this data that you have to update on real time, right? It should be a significant toll on your back end, right?
Yeah.
These numbers.
Mm-hmm. It's not a huge weight on our back end. It's all coming from the Graph protocol. So for our other blockchains, we're really looking to see what they support. So they've started like support for other chains, and we're looking into what they have to offer.
Cool, very nice. Any questions, guys? Any questions from the community?
It's going to be nice if it's on DSC.
Mm-hmm.
Talk about that.
Mm-mm. It looks like we're not getting questions, although we have people talking in the chat. Someone said, can we post our site link? Yes, I will. I'll go through that in the chat.
Yeah, it's already up there. We already got it up there.
Okay.
Yeah.
Oh, someone got that. Nice.
Yeah.
Yeah. So one of the things that we're actually very excited on for upcoming is the release of optimistic Ethereum. That's something that we are really excited about too. Because I know that's been like in the talks for a long time, and Uniswap is getting ready to implement on Optimism, and I think that's something that's very critical for DeFi to really hit mass adoptions. Because like I had to pay a $60 gas fee just now to do this trade, and asking the average retail person to fork over that much to participate in DeFi is like not feasible. So, yeah, we're very, very excited about the possibilities that are coming with Ethereum scaling.
Right. Okay. This is fantastic. If we don't have any more, we do have some questions coming in. So we do have a question. I already asked this question. How do you monetize this at present? I think you already answered that.
Mm-hmm.
You're not monetizing it yet.
No.
No. And so the question is from Matt, are you using Chainlink for price data import, or is it all done via Graph?
It is all done via Graph. We're not using Chainlink currently.
Okay. Is the code open source, or is it closed right now?
No, right now everything is a closed source.
Okay.
Although the widget that we are using for trading is from Uniswap themselves, so we didn't build our own widget. So this like it's a direct emulation of what's on Uniswap, so you don't need to like trust us. Like this is built by them.
Right. Got it. Yeah. So you're trying to be the Bloomberg of DeFi terminals.
Yeah. We tried to be the Bloomberg of crypto, and then started a pivot into DeFi, and we're very excited to see where it takes us down the road.
Cool. It's a very cool tool. I really like it. Hopefully, people get to use it a little bit now and play with it. It's put in a lot of work. The heat map thing is very useful.
Yeah.
And to look at the different liquidity pools. It's very useful.
Well, thanks. I'm glad it's useful because we spent so much time into this, and it's like feels like now like that crypto's having this like big boom, and like there's still so much to do, but it's like such a great time to like be in crypto, and like
yeah. Well, the great thing about crypto is you will always feel like you're behind.
Mm-hmm.
It moves forward so fast. So not a bad feeling. So a little bit of FOMO there, but yeah. So
yeah, for sure.
Yeah. Cool. Okay. Any questions? So I think we have questions coming in. So question from Vladimir, bearish and bullish predictions for coins. What is that based on? So I guess what are the algos there?
Oh, so we have an algorithm that is based on exponential moving averages. It's not really, it's purely like a technical analysis thing because our site was started about technical analysis. So we take multiple different exponential moving averages and roll them into an indicator.
I see. Okay.
It's a momentum algorithm.
Mm-hmm. So it's like a purely like momentum based. It's something that I came up with like a long time ago. That we find is very good for just avoiding the big wipeouts that crypto tends to have. So like in the black swan event of the COVID crash, like we were completely, they got us completely out of the market. And it's very good to like avoid like a giant 50% one day crash. So,
so you're tying your trades to signals here?
Yes, we do. So our signals are based on technical analysis, and really we view everything in crypto as like kind of default a little bit bullish, but if things are saying that they're bad, it's usually a time to not be in them. So like right now, just based on our terminal page, everything is kind of neutral. So this is these dials are the same as as this trend column right here. So it's really not liking Binance Coin, Ripple, Lumens, and Dogecoin. It is liking Theta, but those are not very DeFi related. But
you're picking up signals manually or is it automated?
Oh no, this is automated. We have
no. But when you trade, is it picking up the signals in an automated way, or is it automated trading, or are you just manually looking at this? Oh, I need to go into, or I need to exit.
Yeah, it's so we have an API feed for these. If we go to Tools API, you can query these and set them up to trade automatically. We're not auto trading right now. We're just computing the data and putting it to the front end and trading manually based on them.
Right. So, but you can emit the signals.
We can emit the signals. Like there's an API for people to bring them into their own systems.
Got it. Oh, fantastic. I'm going to check it out for sure.
Yeah. I'm looking through some of these questions here.
Yeah, we've got a few more. Question from Vladimir again. Is that straight from TradingView or something proprietary?
Our indicator is something proprietary, not straight from a TradingView. David B. Yeah, so it's not straight from TradingView.
Okay, so the next question from David B. is, could these liquidity ins and outs also be connected with competition between different DEXs, as well as how much does that come into play?
Yeah, so right now it's just Uniswap on the heat map, but we are looking to support some other DEXs, and yeah, that would be a very nice feature to see. Oh, liquidity is leaving this DEX, but going over to another one. I think that would be a great feature.
Right. Yeah. Okay. Okay, great. Thank you so much, Alex. Appreciate the time.
No problem.
That was fantastic. Okay. We're going to get next up from Consensus, my good friend Clemens. Hey, Clemens, are you ready to go?
Yeah. Mind if I just post my link?
Yeah, please go ahead.
I'm going to just share my Twitter link to
Put
my
it on
profile.
put it on the chat so people can click on it.
You can contact me through Twitter. I put it in the chat just now.
Oh, that beard's gone.
Yeah, the beard is gone. And yeah, I was wearing a Monero sweater on that day because it's a fun thing. So yeah, I'm going to stop the screen share and sign out. So thank you for having me, and I'm glad that I was allowed to present today.
Great, thank you, Alex. Really appreciate it. Thank you so much.
All right, so how do I sign out? And
I'm going to take you out. I'm going to remove you from stage. You're good.
Hello.
Hey, Clemens.
How's it going?
How you doing? Good. How are you?
Good. Thanks for having me.
See you eyeballing my bookshelf. Yeah. Cool. So you got a deck?
I do. I mean,
okay, awesome.
1 second.
Awesome. What I forget to ask everybody to do is take a minute to tell us who you are. And we could do it, but I don't think we could do as good as a job as you can talking about yourself. So before you jump into the juicy topic that you're going to cover, tell us about you, Clemens, and then get into your stuff.
Sure. I'm Clemens Wan. I'm a solution architect for Consensus. I've been with Consensus for 2.5 years now. Before that, I was with R3 for 2.5 years and was at Credit Suisse for 6 years. Started the blockchain working group with a few people at Credit Suisse and kind of been in the space doing enterprise implementations and integrations for the past 5 years now. And actually, the presentation I'll be giving, can you see my screen? Just going to make sure you can. Yes. Is actually a presentation I've given quite a bit to different financial institutions that are interested in DeFi, doing some comparisons with kind of real world existing traditional finance market infrastructure and giving some of that comparison. So happy to jump in. I think I have more than half an hour of material.
Yeah, go for it.
Cool. So I wasn't really sure what would be covered, but I'm going to take a quick step back and just wanted to start off with a few categories. This is actually how I got started learning with DeFi. In this first column, some people may start off by thinking about stablecoins. So you have USDC, you have Tether, DAI. So you have a combination of asset-backed or algorithmically backed stablecoins. From there, you may jump into trading spot through tokens like Uniswap, through SushiSwap, just different types of diversification by buying directly through MetaMask or directly through these DEXs. From there, you may go deeper through lending. So some of you may have heard about Aave or Compound or kind of these offerings where you're staking your token and receiving some dividend payments out of that. If you go deeper to the second column, you may think about asset management. So asset management here could be a combination of assets into portfolios. So what Jamil mentioned about this composability is not only having smart contracts where you can stake, but those smart contracts themselves can be securitizations. So these protocols allow you to build basically asset manager out of the box, right? You can use set protocol, build your own set of combinations and diversifications across multiple tokens. You can also look into NFTs, which are super hot right now, right? NFT marketplaces are kind of the new rage of being new market infrastructure, determining a lot of that metadata that's needed, but also Euler Beats, which just came out, which is super interesting that Mark Cuban covered. If you follow the Bankless podcast, they'll cover that quite a bit. I personally love the idea of having royalties restructured. So this non-fungible token, NFT, essentially represents the kind of core tunes of the different pieces of music that's been listed. And underneath it, normally an NFT, if you sell a piece of it, your price that you've sold it, someone else can sell it in the secondary market and triple or quadruple their money. Euler Beats the ERC that they're using is not a 721. They use one that allows the original creator to receive royalties on top of it. So they receive 8% royalties on top of every secondary market trade. Super interesting. And then on top of that, risk management. So again, more design patterns that look like staking, but kind of create different levels of margin trading. And in the expert level, this is where I kind of start scratching my head, but it's also super interesting is thinking about derivatives. So you're able to have synthetics that mimic traditional infrastructure. You look at yield farming, playing with all these platforms and having token drops of those platforms. Flash loans, which is something that is only possible within kind of the DeFi space, right? Without those kind of instantaneous settlement times, you can't really do flash loans. A flash loan here is really a single atomic transaction, meaning you are sending a single transaction that triggers multiple borrows and refills. Kind of you're lending money within a single transaction, cascading it with a bunch of other smart contract calls, and then paying it back. It led to a economic hole, more or less. Now more and more people are looking at the overall economic impact of adding new financial primitives because a flash loan has never been made before. It's almost like being able to build structured products kind of out of thin air. So super interesting for front office. A lot of traders are interested in DeFi. I'm personally interested in it. So where is this all going? This is just kind of a basic overview. I'm going to be comparing it to traditional finance and kind of relating it back to some interesting terms. Overall, even with the dip, the number has gone up, which is great, right? There's more USD locked in DeFi. You can see this through DeFi Pulse. If you go to DeFiPulse.com, I'll share some of these links. All the market data is pretty much open, and you can aggregate from all these different players. You can, see most of these diagrams openly, and I could probably click a few. So DeFi Pulse, this is kind of live, all of the different smart contracts that have total locked value in the billions, which is kind of conversion from the ETH that's currently locked up. And as you go forward, I'll share with you a bunch of the other DeFi applications. This is usually the summary screen we go to. Why are financial institutions interested? It's because it's novel digital assets registered on mainnet, right? There is a single cap table for each of these new assets. The assets can be issued quite easily. And then also these novel trading and lending models that are being built on these immutable smart contracts, meaning your business logic is executed and you're creating quite a few things. You're creating automated issuance services and workflows. You're creating DEXs. You're creating lending on top of that. And so all of these numbers are now off because I did this presentation a month ago. So if you want the real numbers, you can go to DeFiMarketCap.io as well as just regular CoinMarketCap. I also use Masari, so I have a Masari license. You guys can take a look at it if it would load. But they have different sectors, so they break it off into, this is their enterprise dashboard, if it would load. Drill 5. Oh, maybe it doesn't work because I'm in present mode.
It wouldn't be a presentation if it worked. Yeah, there we go.
Yeah, so Masari has an overview of all the sectors, your market cap, your research. The one that I'm interested in is down here. So currency, smart contract platforms, stable coins, CeFi, centralized exchanges, DEXs, different types of. So this is usually my dashboard, looking at a bunch of research, looking at different screeners and intel associated to it. I'll share that and a link to that later. Let me keep on presenting and just give a little bit more overview. Okay, so it's still loading. Yeah, so these are kind of the high-level statistics that we've looked at. So the number of users that has been growing quite significantly, as well as collateral deployed. Also, another note is that these are made on Dune Analytics, which is basically open source, able to look at any dashboard that you want. Go to duneanalytics.com. We've used these for most of the research reports that we've done. And you can just do direct, SQL queries to get this Tableau view of different metrics, right? These are all updated live. And this is also why I love the community. There's so many things that's free and open source, and people have just been building it to grow the community. Yeah, so the chain link will be on in a little bit. So we'll Uniswap. So I think that this is fairly... Yes.
The Dune Analytics, is that a consensus product?
No, it's just open. Yeah, I tried not to shill too much consensus. I'll have a slide at the end where I'll share about consensus at the end. So why else is it interesting? I mentioned yield farming. So if you think of this level of granular investing and investment options, I think personally it's kind of the death of a savings account or even CDs. The returns that are here are really, really ridiculous, I think. It's better than getting 1% for keeping your money in a retail commercial bank. And maybe there is some quote unquote liquidity in your bank, but I think overall the cryptocurrency ecosystem is super fungible, right? You're able to do swaps and you're able to do trades. If you wanted to move between, for example, your Amazon credits to your Azure credits, you can't do that easily today without kind of moving it back to fiat. Within crypto, you can just kind of, swap it to a different token. If you want more allocation to your Filecoin, right, distributed cloud compute, then you can also move to that as needed. And all of this lending and borrowing is really just staking. It's just that staking on top of that has different yields in different ways. These are from 2020 numbers, but DEX growth up and to the right, 1,000%. And this is off of the application layer. You'll see decentralized exchanges will continue to grow. And again, for June Analytics, you can just pull this latest data. Again, more information about lending protocol, explosive growth in Q3, Q4, and now even Q1. So let's kind of get into the meat, right? The reason why a lot of financial institutions are interested is this new user experience for packaged financial instruments. So all of this is available online directly. You're just kind of interacting with the web front end, but in the back end, you're just running API Ethereum endpoints without any large barrier to entry. So there's no need for an intermediary. You can join direct deposits and withdrawals of funds with these easy smart contract connections, which is why I think people call this Web3 evolution part of the crypto Narnia bankless world that we want to live in, is because you really don't need that much overhead in order to access these different pools of liquidity. The governance projects on the right side, you'll see is the board is pretty much open. I think what's likely going to happen through these forums and voting tokens and governance tokens is essentially lobbying. You'll see more and more people buying up tokens in order to vote, in order to add and list parties of different protocols onto these dexes. And it's going to be pretty powerful. When you look at the different types of tokens, there are distinctions. So I mentioned asset tokens, right? Investment opportunities. An asset is kind of like a company, right? It is representative of the team. It is a token that you can buy at spot, and you can have the converted value. You're basically out of ETH. Your ETH is no longer there. You've kind of swapped it out for a new asset. That could be an ERC20 token asset, but you're basically out of it. A protocol may be built by one of these companies, but it's essentially locking up your value because there's additional smart contract logic. And here, that ETH value, so the total lock value, is a conversion from the ETH value locked times the value of ETH at that time. So, the ETH value locked will fluctuate in relation to the value of ETH. Tokens can fluctuate as well, but they can go max up or max down depending on that token. Hopefully that makes sense, because it is a big distinction. Some people buy into protocols because they want to gain some exposure to kind of the upside of the smart contract, versus buying into tokens, which could be pump and dump schemes. Not saying they are, but not saying they're not. Okay, so interesting, because DeFi replicates a lot of financial services on top of the trustless infrastructure of Ethereum, and we've seen significant growth. There's an even bigger diagram for 2021, but it didn't fit in this, and this was nicely done by the block, so I didn't want to redraw it. And I think what's likely going to happen is that these initial areas of innovation, like exchanges, really will start to expand for better user experience, right? There's already all these opportunities for a new UX for a bank, like a very lightweight bank, where you give them money and then they more or less put it into Compound and give you a return on that. They'll connect it to credit cards, which has already happened. And yeah, then you can spend your ETH as you would spend anything else. This is one of those great diagrams that shows that comparison. So every aspect of banking, from money to central bank digital currency to commercial bank, investment banking, exchanges, brokerages, insurance, payments, asset management, has an equivalent conversion in DeFi. It's quite powerful. It is here to stay. I personally think DeFi will just become finance, because more and more parties are just going to build and acquire. I think institutional money is already here. This is some very high level explanation of how this looks. So I mentioned the settlement layer is really Ethereum. It has smart contracts that represents those assets in that asset layer. Really, really interesting that all of these are built on top of protocols as smart contracts as well. And then applications can build on top of that. with aggregation layers like 1inch or Uniswap pulling from multiple applications. And it all comes together. And kind of the fun part about this, by the way, is that this is a diagram that's published by the St. Louis Fed. So it's not, just a bunch of people hacking. This is from a tweet directly sharing the amazement that they have about the Ethereum ecosystem. This is my personal view of it. So on the bottom, you have ETH as gas, or kind of running the underlying protocol. On top of that, you have CDP, which is a collateral debt position that MakerDAO creates, essentially allowing for a stablecoin. That stablecoin itself, on top of that, then has a bunch of borrowing and lending and different types of design patterns. And once you have this stability, and some people draw this as kind of an inverted triangle, right? You're using ETH and different versions of ETH to support these very, very cool applications. And so the one I like to mention that most people really enjoy is Pool Together. So it's called a lossless lottery, where you're able to pool together funds and essentially put that fund for a month into a compound to accrue interest. And then the lottery winner wins the percent interest return of the entire pool, while everyone else receives their money back. So it's like gambling, but you actually don't lose money. You kind of just continue to pay the pool together smart contracts. On the right side, you'll see wallets, right? This is where MetaMask comes in. It doesn't only act as kind of your interface to all of this. It's also your key management. It's also your custody. It's also your mobile browser. So it's an access for everything. And I think that the wallet interface will be the interoperability interface for all these multiple chains. You'll be incentivized to build, and kind of developers will be incentivized to build this as well. Okay, so how does this actually compare to kind of the early days of the internet and early days of banking? Payment processing, right? Text for making payments. You have WorldPay, which was at the time 35 billion, is now converted to a wallet, right? You can use this through MetaMask. You can send payments peer-to-peer pretty easily. I just scan your QR code for your address. You can do ENS to register your name. I'm Clemens.eth. You can send me ETH if you want to, I guess. And what about core banking, right? Tech for deposits and savings. You have Jack Henry, which was about 15 billion, and now it's MakerDAO. It's completely online. There's no, hundreds, if not thousands of employees. It's really just the MakerDAO team, which I believe is still under 200 people. And you have lending and underwriting, right? Finastra, which used to be Mysis that made LoanIQ. They were doing syndicated loans for the longest time. And now you have new tech for managing loan books. So it's kind of all there. It's actually quite amazing how far it's come and how quickly it's kind of overstepped through the traditional financial interfaces that you might have inside of a bank. And on top of that, wealth management, so tech for trading and rebalancing. eInvestNet, right, which was 4 billion, is now something like Set Protocol. And I'm not saying all of these are going to exist in 10 years, but it is quite interesting how quickly they've come up with new interfaces and have focused on not only the smart contracts and how they operate, but the I guess flexibility, as well as the integration that different mogul financial operators might look at and say, hey, this might be a good opportunity. As well as exchange and clearing. So tech and markets for asset exchange, NASDAQ, which was or maybe currently is 20 billion. There are relay networks that do things like this. There are automatic market makers that cover a lot of the fulfillment of these swaps. And there are even, within Coinbase and Gemini, and, Coinbase's S1 just came out. They have just so much more influence on the investor market, as well as breadth, that if you just take a look at Binance, when Binance first started and they were an under 100 person company, they were doing, I believe, half of NASDAQ's total market cap just from token trading, from cryptocurrency trading. And with their success and their global growth, they are still, by comparison to the staff of NASDAQ and the tech overhead and technical debt that NASDAQ probably has, is super lightweight, super tech forward, and has been growing very quickly. And finally, derivatives, TradeWeb, 12 billion. There's different types of synthetic markets that's available. You can probably still buy Tesla exposure through crypto. You can probably get crypto exposure through derivatives as well, but there's new protocols that are coming out where you can trade derivatives for everything. So what does this look like in my perspective? Because I do a lot of enterprise integration. We've worked with central banks looking at central bank digital currencies for wholesale, which is more or less bank-to-bank reconciliation payments. This covers issuance, this covers exchange, covers management, and covers usage. And all of these that are live currently in the mainnet world may want to see some exposure in private networks. So the work that I've been doing is not just copying the patterns, but really thinking about the implications of this integration, thinking about how much does it cost to actually build a separate network if you want to build a separate network. The short answer is it costs way too much. So sometimes connecting to an existing mainnet where the incentive mechanisms are already deployed is much better than creating a consortium and then figuring out who owns the tech and who owns the support mechanisms. And then shared utilities never really come together as real shared utilities. It's not like the old days where Payments Canada was a consortium of all of the different banks creating a RTGS system. That doesn't really happen today as much anymore. Most people are part of the SWIFT network. SWIFT has been looking at this for quite a long time for messaging, and I'm sure this will continue, right? But this is much more than just messaging. There's a lot of different layers in here, programmability, aspects that different central banks want to see embedded. So for example, within central bank digital currencies, the retail leg means that you and I can have a digital wallet that represents a central bank, digital currency that looks a lot like cash. There's things about cash that I think are pretty interesting and pretty similar to cryptocurrencies and digital currencies. You can, trade it with another party anonymously. It's accepted at different payment providers, and maybe digital currency has a similar set of requirements, right? You can trade it pseudonymously, but at the same time, there's also layers of KYC and compliance that you can build on top of it. Okay, so I think that was my quick spiel about DeFi and kind of how it connects. Kind of quick background about Consensus, kind of ended out. Consensus has been around since Ethereum's been around. Joe Lubin was one of the co-founders. We run quite a bit of infrastructure companies that you probably know about. If you use Ethereum, you probably have worked with Consensus indirectly. We have Truffle, which is basically 4.5 million downloads as a dev environment, basically with Ganache or with any type of Truffle suite that you would use for developers. Diligence, we've covered hundreds of different types of smart contracts that are live today on mainnet. Infura, it covers quite a bit of, I believe, billions of calls, API calls per day, which is directly used for mainnet. We have a set of suites with Codify, which is for digital assets and asset management. We have Quorum, which we just acquired from JP Morgan as a permission network. And we also have MetaMask, which everyone uses. It's currently at over 1.6 million monthly active users at the moment, and the swaps platform is up and running. So that's Consensus, and my role in all of this is really to figure out how enterprises integrate with these different ecosystems, building out new ones, but at the end of the day, thinking about what real value, what real liquidity looks like. Cool.
Fantastic. Yeah, thank you, Clemens. That was great. Did you have to pay for Masari.io?
I did. There is an enterprise account, and we have a consensus code for 15% off if you guys want to try it. There's a lot of interesting content for events because they aggregate in their intel across everything. But the base version is good as well. It just depends on if you're like a large crypto trader, you'll probably want to see some of this information.
Right, cool. We got some questions. I've got some questions, but that's maybe for later. Let me get to the questions from the people. What are some of the traditional firms doing now in response to these offerings in the DeFi space? That's from Thomas. Besides, I would say
so much. Yeah, so the linchpin, I guess, is custody, because people are comfortable with intermediaries, and so the custodian play is probably the biggest one. They're also looking at different types of trade modules that they can push out. So that there's two camps here. You're either looking at taking your traditional financial assets and reskinning it, digitally reskinning it onto a blockchain platform of some sort. So you may be pushing onto a permission network or a public network, but essentially you'll have a bond with its full order book, right, on chain. You'll have all the payment mechanisms and kind of KYC available on chain. The problem with that is it's different, and not a lot of people trust it yet. So I guess the way that people get exposure is by creating derivatives or creating ETFs or creating trusts, and they use kind of the traditional way of dealing with high net worth clients into exposure into crypto. In terms of what people are building, people want a DeFi gateway. Essentially, they want to access all these DeFi components. Once they have something on their balance sheet, which will take more or less the longest time, is if they're able to have crypto exposure onto their balance sheet, like MicroStrategy or Tesla, and you're able to pay for your Tesla with the Bitcoin, and they're able to do the conversion for you, make sure it's not double taxed with capital gains tax, then it's super powerful. Right now, I can actually buy real items, commercial items with crypto. And yes, you're kind of foregoing all of the future costs of Bitcoin going to $1 million or something, but you've used it, and so hopefully that's also a top piece of it. Exchanges are building quite a bit of connectivity. So Six Exchange in Switzerland, that network is very tight. SDX is Six Digital Exchange has been building out both a DLT layer plus regular expansion. So they will hopefully have gateways to all of these DeFi protocols. Same for BIS. So BIS is an international consortium of central banks. They've been looking at central bank digital currencies. And so most of the commercial banks that are out there are trying to figure out how to connect to a central bank digital currency if it ever comes around. And this could take, 3 or 4 years, but these things happen faster than people think.
Just want to add, if anybody here is an academic or a banker, I run a central bank digital currency think tank, and we actually have the Swiss, the governor of the Swiss bank, central bank, coming and talking in April, and somebody in the IMF. If you're interested in it, I'm going to post the link to that at cbdctt.com. You can request an invite as long as you're an academic or you're in the banking sector. And it's operated under Chatham House rules. Okay, we have some more questions, Clemens. How do exchange aggregators like 1inch and Matcha play into this mix of DeFi protocols? And that's from Paul, Agathos Laboratory.
So all the aggregators are at the topmost layer. They are running liquidity pools, and more or less they're paying people to put in money in order to provide the best price, right? So there's it's kind of an advanced version of exchanges where if you're a liquidity provider, you're putting in your tokens in order to receive a trading fee. And most people don't just do this kind of flat. They have a lot of other combinations of bots that allow them to do market making and make money off of fees, as well as fund the pool so that they're able to meet the prices without slippage. It gets pretty complex, to be honest. I do not run any type of relay or network pools or any type, because it's just way too complex. Even the fees might be good, but you need too much capital to be a part of it.
A couple more questions. What supports someone willing to borrow a token at 20%? This is from James Dix, Crypto Oracle. I guess the question is, why would they borrow a token at 20%? Why would they need to do that? What's the motivation there?
That's a great question. I think there are a bunch of bots that are looking to figure out this conversion, and they figured something out that I haven't. Because it is curious. It's like, well, if I have some of it is scarcity, some of it is kind of margin trading and kind of the different types of smart contracts that provide that borrowing rate so that you can margin trade. But again, that's a very high borrowing rate, but they're also trading quite a bit, so they're able to pay it back very quickly. So it's just part of the algorithmic process. The set of fees hopefully do come down. I mean, right now it's just attractive to lend, but it's not clear. Well, if who's on the other side of the trade? Well, it's probably not just one person, but it's a multitude of bots that are doing it. Right.
Along the same vein, there's another question from Felix, the CTO of Social Impact Network. It's the same kind of question. How do you feel about the crazy high APY, the yields of some protocols, which are mainly based on issued rewards? Seems not too sustainable.
Yeah. Some of this is really like funds sloshing around, and DeFi is like funds sloshing around. It's a lot of ETH value that's then converted into multiple contracts and then moved around. I actually don't know how some of these APYs are someone could just kind of key it in based on their supply and demand model, but who determines the initial supply, right? That's kind of up to the protocol. So it is kind of
so
new.
From an economic model, when you have high APYs or yields, what you have is there's a bit of a race occurring with borrowing at a high rate and then being able to lend again and re-lend, right? So a lot of these protocols, you can circle back around and stake again, right? You pull out and stake back again. And some of that is creating this kind of this ratcheted up yield structure. I think there is both in the CeFi and the DeFi world, there may be this element of I don't want to say the word Ponzi too easily, but there is a bit of potentially high risk elevating because of money slushing around too high, and then when it's basically like fractional banking, when the money is stored at a bank, and the bank then lends it out, and then stored at another bank, and we have that occurring here. And so there is this race to have assets under management, and that's driving potentially some of that in terms of yields being offered at higher rates. And I see some of these yields, and clearly they don't match up with the yields in traditional finance. So is it a concern? I think so, but it's also an indicator of a very, very, very nascent market, very young market that is going through some kinds of economic soul searching, and then once it does find some degree of stability, we'll see the kind of the rates that we're more used to expecting. Some more questions from Thomas Huff. Is there a scenario where ETH and Hedera coexist, or is it one or the other? Is it mutually exclusive?
No, the crypto market infrastructure are the exchanges, and so whoever is listing tokens will have access to tokens. That's going to be the easiest route. That's the most taxable route connected to your, KYC of that entity. I personally think that ETH has the most pairs. Everything's an ERC20 token, more or less. And so if you want it to be more easily interoperable with MetaMask or kind of the bulk of the community, then I would use ETH based, but I like the Hedera hashgraph guys. They have their own use cases. They have their own. We're all friendly. It's kind of an open space, and I don't think that there's any party that would kind of try to go all in on one platform either. So it makes sense for people to experiment and for people to be early adopters to platforms.
Great. Okay. I think that's all we have time for. We're going to jump on to our next speaker, which is Daniel Roberts from Decrypt. Clemens, that was fantastic as usual. Thank you so much. Drop your contact information in the chat. There's a couple of people that are asking for it. And we look forward to seeing you at our next thing.
Okay, we'll do.
Yep. Thank you. Yep. Okay. Next up, we have Daniel Roberts, who is here, doesn't have a slide deck, but wants to talk about crypto for everyone. Hey, Dan, how are you?
Hey, good. How's everyone doing?
Good. Welcome. Thank you for taking the time out to speak with us. I know you're super busy. I want to kind of start off with a couple of different introductory things. First of all is, please tell us a little bit about yourself, and then tell us about Decrypt, and what you're doing and the work that you're doing. It's fantastic stuff. And not a lot of people know about it. They're learning about it, but I'd like to get everybody to get a little bit more acclimated with that.
Sure. Well, look, anyone at this virtual event is going to be interested in what we're covering. I hope that a lot of you already know about Decrypt. The site launched in 2018. I've just joined in the last 3 weeks as the new editor-in-chief. I previously was at Yahoo Finance for 5 years, and before that I was at Fortune Magazine for 5 years. And I've covered cryptocurrency since 2011, which, obviously early days. And again, you guys, something I tell everyone in this space, it's still early days. If you're in it right now, it's still, as Jamil said, it's a nascent technology. There's a lot of corners that are exploding in popularity, and DeFi is certainly one of them, and feels like, one of the hottest spaces within the space. But again, all of this is still very, very new and early. And so there's, so much happening that's really exciting. Decrypt is a new site, I should say, if there's any of you who don't know. We have a terrific and beautiful mobile app that I encourage everyone to check out. And interestingly, I was also going to caution, because this is a DeFi event, that I'm not here pumping any token. It's funny, I tweeted out that I was going to speak at this event. I got all these tweets, mention Rune, mention Sushi, mention Aave. I'm not here to pump a token. Although that said, we do actually have a reader rewards token on our mobile app that has been in an invite-only beta for a while, and we've just announced that very soon it's going to launch to the public. And that's a very cool thing we're experimenting with. Basically, we reward you for reading Decrypt. And, as of yet, that doesn't have a clear monetary value, but there will be exciting things to come. And really the idea, you guys, is, we cover this business. We are a news site that covers crypto and Ethereum and Bitcoin and blockchain, but we also want to live our truth, right? We also want to participate actively in the industry we're covering. And that's the idea of having this token. It's exciting for me because one of the things that initially attracted me to covering cryptocurrency, the industry, was the potential that we could use this technology to help pay for frictionless micropayments, and to help pay for digital content. I remember maybe 10 or so years back, all these different news sites started launching paywalls. A lot of them really didn't have any business launching a paywall, because if they didn't yet have a big enough audience, or if they were super niche, well, it's a big proposition to get people to pay to read your site. And yet, as a career journalist, I want people to pay for journalism. I want journalism to make money. And so the potential to actually use, decentralized tech and to use tokens to fund content and to fund real reporting is really exciting for me.
So as the editor in chief of Decrypt, you're seeing a lot of what's happening in the market, right? You're getting, in a lot of cases, first-hand information. You probably know some of the dirty laundry that's out there in the market. You've got a perspective. What is startling you the most about the DeFi market right now? And then on the flip side, what's worrying you the most? So what's really exciting you? And then what's really worrying you about the DeFi market as you see it at this time?
Yeah, it's a good question, and it's probably the key question in terms of mass adoption, right? And I imagine that many of you on this call are really invested in the space. Maybe you're invested because you actually work on one of these projects. Maybe you're literally invested, financially. And I think a useful thing, Jamil, would be to zoom out a little bit. I had an anecdote I wanted to share with you guys. And by the way, the previous speaker from Consensus, Clemens, there was something he said that kind of caught my attention, where he said DeFi will soon just become finance. And I do think that, again, if you're on this call, that's probably what you hope will happen, and that's the goal. But a lot needs to happen for that to be the case. And so I think it might be useful to kind of zoom out a little bit. I'll tell you guys sort of a tale of two camps of people, right? It probably started in November, December. I noticed that, my text thread with my buddies, and these are all guys who live in the New York area and they're in their 30s, they started getting obsessed with DeFi, which is cool, right? And it's what probably a lot of you want to hear. And the texts were coming ping, 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 ping. And, examples like what happened with Unisocks. I mean, we all saw those go nuts. And, the headlines about, a digital token tied to a physical pair of socks has gone through the roof to 90 grand per token, whatever it was. These things are catching people's attention. And again, I mean, I've covered crypto and Bitcoin since 2011. Even I've never been, I don't think, as obsessed or, texting all day about this stuff as my group of friends, again, none of whom work in crypto. Some of them work in tech, some don't, but they have really gone down the rabbit hole with this stuff. And they're texting about staking, and they're, invested in this project, and they're interested in Compound. On the other side of the kind of pole, the spectrum, is that after taking this job at Decrypt, my parents, who are of a certain age, let's say above 65, asked me to give their Zoom with their friends a tutorial, a Bitcoin 101, which I was happy to do. This happened a week ago. It was a lot of fun. And I just I tried to be so basic with them. And at the end, the questions were still so much more basic than you'd even think. And the reason I bring this up, I know that, we're focused on DeFi, but I think it's relevant for all of you if you want to kind of watch these projects grow, is how are you going to tell your story, and how are we going to make this industry and this market kind of accessible to all, right? Because you don't want to only have young, cool, tech-savvy people involved in this stuff who understand the tech side. You also don't want to only have already rich investors, millionaires and billionaires who have money to play with and throw around. Mark Cuban right now is out there talking about DeFi. He loves it. He's all about it. Well, he has a lot of extra money to play with, right? He can buy an NFT or something on Top Shot for 15 grand. And then he can see if the price goes up and he wants to flip it. And if it crashes, that's okay for Mark Cuban. But, you also want to open the arms and open the gates to people to try to explain to them the appeal of this. And again, there's another comment that the previous speaker, Clemens, said that I thought was really well phrased. He said, really, he thinks of some of these protocols as the death of the savings account. I mean, you can put your money in a Goldman Sachs savings account vehicle where you're going to get 2%. That's it. I mean, or you can try one of these and get much higher returns. But obviously, the risk is much greater. And also, there's a great hurdle right now with explaining to people how it all works. And again, the reason I even bring up the example of my parents and their friends, the kind of questions they were asking, I mean, many of them didn't even understand that if you buy crypto, you can then convert your crypto back to US dollars. They said, well, how can you convert the Bitcoin back to dollars? I said, whenever you want on an exchange, just like if you were to cash out and sell your stock, then you'd have a certain new balance in your E-Trade account. Even that, I mean, there's still a 101 that for a lot of people, they don't know. And I think, you guys, the reason I say all this is that when you talk to people in this space who are really steeped in it, whether it's people who are working on DeFi investing protocols, whether it's people in the NFT space, which, I know most of the companies speaking at this, are not NFT platforms, but there's a real something you guys have in common, which is Ethereum, right? I mean, NFTs and your DeFi investing space share that in common. And they share in common the fact that people who are steeped in this stuff often assume a base level of, everyone knows this, and this. But actually, as this industry has exploded into mainstream attention, we all agree, more than ever before, right? And I think the pandemic really accelerated that and created a perfect storm for this stuff. There's a little bit of, slow down for a moment and let's maybe try to do some educating on how these protocols work. So a long way, Jamil, of answering your question, which is that the risks are obviously that a lot of these protocols are very, very new. I mean, you talk about DeFi and how popular it's gotten. And again, as the previous speaker said, it's all up and to the right, and Bitcoin is the same way. Skeptics love to talk about 2017 when it crashed. Well, zoom out. In the 10 years that Bitcoin has been trading, the line is up and to the right, with a couple short-term crashes. But skeptics, they just remember that it once crashed. And, even Bitcoin is still very new in the big scheme of things. We're talking about 10 years. So, it's good to keep in mind when we talk about these protocols and trying to make clear to people the appeal. And, you can make this much amount and much faster, or you can get a much better interest rate. Something like BlockFi, for example, has taken off. Think about couching things in terms that people can understand. And of course, one other example, Jamil, that might help answer your question, I think the rapid popularity of Top Shot, and again, I don't want to talk too much about NFTs. I know here we're focused on DeFi investing, but I think it's explained a little bit by the fact that it moved over to, Flow blockchain, to this new platform where basically you don't have to pay in crypto. Now, some purists might say, well, what's the point then? What are we doing here? The whole point was that it's crypto collectibles, but people are now buying Top Shots in dollars without ever having to worry about how the tech works. And if you think back to 10 years ago when Bitcoin was new, the value proposition you would always hear from people is they'd say, well, just like the internet or just like email, eventually you won't have to understand how this tech works to use it and to benefit from it, right? People don't understand HTTP, SMTTP. They just know that they open the internet and it works, and they send an email and it works. And the pie in the sky for all this is having people use it or benefit from it who don't understand the back-end tech, right? Ideally, you don't want someone to have to buy some ETH on an exchange, put it in their MetaMask wallet, then go to the new platform where they're going to buy a collectible, then pay with the ETH from their MetaMask wallet. For most regular people, guys, it's too many steps. So the pie in the sky to me would be reducing some of the friction here. And that will reduce the perceived risk that a lot of people see with these DeFi protocols.
Yeah, so so in the beginning of this conference, we did mention, in my opening talk, I mentioned that DeFi has an education problem, right? So clearly, even blockchain but DeFi has a bigger problem because it's far more complex. It's more innovative, but at the same time, it's risky and all of that. But what do you see? Do you believe that DeFi is an indicator of a different future? Wherever DeFi is today, so be it. But where do you think things will be 20 years from now? How will human civilization be different? So we know what the internet has done for us. I can now click and boom, I've got something delivered to my door in an hour. I couldn't do that really 20 years ago. What will 20 years look like in terms of finance and me doing finance and savings and all that? And what role will DeFi play in that, in your opinion? And you're seeing all this content. People are talking to you as a Decrypt editor, and that's a major website where you get there's a ton of people going there to learn about what's happening. Where do you feel we will be down the road?
It's a great question, and it's fun to think about, right? It's anyone's guess. We're talking about the push and pull here between education and mainstream understanding versus the people, many of whom are on this call, that live and breathe this stuff. Part of that is that for so many years, and it certainly frustrated me as a journalist who covers this space, mainstream outlets, their only interest is if and when there's a price crash or a price surge. So they write a story when Bitcoin is through the roof, or a meme-based crypto, Dogecoin, is through the roof. What's happening here? And then they write a story when, wow, Bitcoin crashes 12% in one day. And we know the results of this, right? It adds to the stigma. It adds to the idea that this stuff is so volatile. Oh my goodness. So I mention all that because my usual caveat whenever I'm on TV or doing media talking about the price is that no one knows for sure what's going to happen with the price in the near term. Don't believe anyone who says they know for sure. People who are shills for a certain token, they just keep saying, to the moon, it's going to soar, up. We'll see. And similarly, it's really hard to predict where this tech will be. I do like the argument that in many ways, this feels like the early days of the internet, of Web 1.0. And you just use the term Web 2.0. I mentioned that we at Decrypt have our reader token. We also have all of our stories cross-posted to the IPFS. And if anyone knows what that is, the idea is that this way there's a vault and that no one can tamper with it. And our stories are always, viewable in the future, because who's to say what happens when there's some kind of outage, whether it's our site. We all know what happens when there's an AWS partial outage and 80% of the internet goes down. So all of those things are very exciting to me as potential use cases for this tech. Now, you ask about the investing side. Again, I think the idea of telling the story that many of these DeFi investing options are much better for you and will give you a much better return than a traditional savings account. some of these, the rates, if you compare it to a bank savings account, you might as well put your money under the mattress, right? You're not going to accrue, any savings. And so that's very appealing. But again, to go back to the example of people of a certain age, another question they all ask is they say, well, is it FDIC insured? They all ask that. And the answer is no, it's not. Someone like BlockFi says, well, we're protected through Gemini, through, NYDFS. Fine. There's all kinds of workarounds. But a lot of people of a certain age say, well, if I buy crypto on Coinbase, is it FDIC insured? No, not in the way that you're thinking. So, your real question, where will it be in 10, 20 years? I hope that it will be helping people and not just rich people. The investing stuff, which a lot of these projects that have speakers featured at this event today are, that's great. But again, a lot of the people right now who are so jazzed up and excited about them are rich people who already have a certain amount of money to play with and invest. And they're excited because they can make more money. That's cool and that's great. And investing is certainly important. But again, to back up and go way back, or what feels like way back, I remember years ago doing an interview with BitPesa. And that was a company that was helping people in Africa and certain other countries who don't have bank accounts get paid in Bitcoin from their employer. And then the app converts it to their local currency for them. That is wonderful. That is an example of this technology that is helping people and changing their lives. I know there are many more examples of this, but that stuff to me is very cool. Or when you talk about smart contracts, I'll give you another example, and I hope I'm not rambling, but when people don't understand smart contracts and they don't understand Ethereum, one example I mentioned, I remember from a few years back, a student at Tsinghua University in China had accused a professor of something. I don't want to get this wrong, either harassment, something. And the university didn't take it seriously at all, didn't take the accusation seriously. That student took their letter of complaint that they sent to the university with all the details and put it on the Ethereum blockchain. And you can see that as a note forever. That is very cool. That letter exists on the Ethereum blockchain so that no one can quash it, put it aside, rip it up, say it didn't happen. Those are very cool and I think instructive examples of the use cases here. But, then when you get down the rabbit hole, you talk about DEXs, decentralized exchanges. We had a story recently about how Brave, the more secure, crypto-based internet browser, is launching its own DEX, decentralized exchange. That's very cool. But with all this stuff, you also have to pump the brakes and define 3-4 different acronyms, right? When you talk about these developments. The guest from Consensus just now mentioned Infura. As I understand it, the news just last night from Amazon about adding support for Ethereum nodes on AWS, well, that's going to be a challenge to a service like Infura. So point being, bigger and bigger names, and we all know MicroStrategy, Square, Tesla, loading up on Bitcoin. Bigger and bigger, more mainstream consumer-facing names are getting into this space. And the question is, well, who is actually going to control and determine where this tech goes in the next decade? To your point, to your question, is it going to be the existing big tech giants who in some cases are pretty late to this stuff, but they're powerful enough and they have enough influence and built-in audience and built-in user base that they can afford to be late and they'll still gain a big foothold if they decide to adopt? Or will it be the pure play crypto companies? Will they be the ones to really drive the adoption of this space?
Right. So it seems like you are, and rightfully so, very much your metric, your heuristic of a viable technology is what is its social impact? Is it a sustainable, pervasive impact to everybody, right? It can't be to a certain niche of society, right? And it needs to matter to everybody.
Well, not everything, by the way. Not every application needs to be, super macro in its uses. But I do think that the examples that are going to help bring more people to the space. And if you're on this call, you should want more people to come to the space, right? You want more people to be able to use this stuff, to be excited about it. And so I do think that, in a lot of cases, there's a little bit of an accessibility problem, and there's also been a little bit of failing to tell the right story.
Right. So that clearly is a problem. Blockchain and Bitcoin has had that problem as long as it's been alive. And one of the reasons we're doing this conference is to chip away a little bit at that problem, to get more and more people understanding what this is and talking about it. But it's an uphill battle because it involves, unfortunately, at this point, at this stage, tech talk, right? The geek talk has to be there because it's involved. You have, for the first time in history, the combination of value with tech. It's intertwined pretty much, right? So
the internet of value, right?
Exactly. And so how that code is treating that value is of a concern. Whereas if you walk into a bank, what the bank manager tells you or the bank rep tells you, that's how things are supposed to be, right, on paper, on contract. So a little bit of different world. And so it does end up excluding people, unfortunately. And hopefully that will change over time. And we get to the point where I just order and click. I don't care how HTTPS works. I don't really need to care about that, right? Okay.
And by the way, how do we get there? Just keep building. I mean, I remember, because I was already kind of covering this space so frequently in 2018, amid crypto winter, the narratives started to change when we would have guests on Yahoo Finance Live, right? Instead of talking about the price soaring, they just started saying, well, we're heads down building right now. And at the time, it was probably hard for a lot of CEOs of crypto companies to say that. It sounded kind of unsexy. Well, everyone right now is really heads down building. I remember an interview with the CEO of CoinList where they said that. And it was like, that's the headline, but they were building. Because now, of course, if you're a believer in this space, we sort of emerged from that. There's a lot of mainstream adoption right now, and the narratives have changed. We all know, and I wanted to make sure I mention this, this is such a narrative-driven space. And that's also what we're really talking about when we talk about the kind of hurdles with the education, right? Is that the narratives can become so negative. Every time there's another hack, people who don't understand this, they say, well, Bitcoin got hacked. And you have to explain, no, you can't hack Bitcoin itself. The Bitcoin blockchain was not hacked. Exchanges were hacked, and that is an issue. And yes, there's hackers who, ask for ransom in Bitcoin, but the US dollar is also used often by hackers. So these are things you sort of have to explain. And the other thing I just mentioned, I know we want to allow time for questions, Jamil, is the biggest push and pull right now, too, in the narrative space is, are these tokens going to actually be used as currencies? Or is it just an investment? And the Bitcoin crowd at some point converted to, it's a store of value, it's digital gold, and even if that's all it is, that's great. Well, the original white paper did say electronic peer-to-peer cash system. And sure, the use cases of technologies evolve, but it's not really being used as an electronic peer-to-peer cash system. At least Bitcoin isn't. And some people say, well, that's okay. Digital gold, that's good enough. Ethereum, I think what really excites people is, not just the DeFi and not just the NFTs, but all the different use cases for smart contracts. And then you really get beyond just investing. Jamil, you're muted.
Yeah, one more question before we go to the audience. How do you select what will be or not be a headline? What's your filter?
Yeah, it's a good question. There's a number of crypto news sites out there. And so some of them cover everything, every little development or product change or news from every company. And I think it also benefits the reader to be a little choosier. Also because of our size, we've been around since 2018. Some of the others have been around longer. We don't necessarily write up every single shred of news there is about this space. When I am thinking about framing a news event or a headline, I think about, are we immediately with the headline cutting people out and making it uninteresting to them with 3 different acronyms they don't understand? So I'm always trying to limit the number of things in a headline that people need defined for them. So if you have a headline and it mentions DAI and NFT and ETH, it's sort of like, well, someone might see that headline on our site, and that's 3 different things they don't know. So I try and cut down on that a little bit, and I also try and answer to our discussion before, how can we frame it in a way that's interesting to the most people? But again, that's not to say that there aren't projects that are really important and doing great things that, there's not necessarily a way to frame it in a way that's interesting to a huge number of people.
Okay, so you're gauging somewhat. You want the person to be comfortable with the article and reading your article, reading the material, saying, yeah, I can read this and get through this without stopping in the middle and then walking away, right? So, because the more they don't know, the higher the probability they're not going to finish reading that piece.
I think I'd also say that at Decrypt, and maybe this is unique, we have a real interest in educating and helping with that. So it's not just news for everyone who already understands this space. We have a wonderful section called Learn, where we have these terrific, handy explainers, and they really try and hold your hand and walk you through, well, what is DeFi? What is decentralized finance? Back up. It's this, this, and this. And then, well, wait a minute. I mean, isn't that what everything already was? I mean, in a sense, everything that was happening on blockchain was decentralized finance. In a way now, that's just the buzzy term right now for what this space was already doing. Well, but here's some of the new corners of it, and Aave and Compound, and here's why they've risen to such prominence so quickly. So we try and do a lot of that. We try and be informative and helpful and educational, but we also cover all, the biggest daily news in this space. I mean, we all know some of the biggest things that have happened in the last few days. Goldman Sachs is planning to relaunch its crypto trading desk. That was big. Citi came out with a note and said that Bitcoin is hitting a tipping point. That was big. So there are things that I think right now rise above the surface to become major mainstream news. And it's good because it's making more people pay attention and consider this space.
Cool. We've got some questions. One is this may be a little bit, you may have already covered this a bit, but smart contracts are algorithms or software. And this is from John with Harris Healthcare. What role do you see bugs, aka flaws, in software play going forward? Yeah,
look, I think that is a concern some people have. And in fact, to bring up the example of when we're talking to newbies, everyone says, well, who makes the decisions about these things? And you say, well, it's decentralized and the network is upkept by a ton of different nodes. And, that's called consensus. And that's why we don't have to worry that one person is going to change the code. And similarly, I do think people with some of these protocols have concerns about bugs. We also saw what happened with Yearn Finance. Remember that maybe 3 weeks ago? I mean, that was really alarming to people. There was a breach, or I sort of tried to read a how-to that got into the weeds of how that happened. So I think it's a good question, but I also think that the appeal of this whole space, right, is that so many coders are deeply enough invested in it that one person isn't going to necessarily, I mean, it goes for breaches and it also goes for when there's a bug, you hope and you have to trust that the people who, have a stake in these projects can band together and fix and keep an eye out for those things. I mean, in a way, it's like Wikipedia, right? I mean, it's like the idea of, well, who's to stop someone from going on Wikipedia and changing my, entry to say that I'm a jackass? Well, no one is stopping that. Someone could do it. But if you're a big enough name, if it's George Clooney, that change is probably going to be seen pretty quickly because there are people who are really invested in watching Wikipedia and monitoring it and keeping it above board.
Okay, great, fantastic. We got time for one more question. This is from Christian. With the Decrypt app and its reward token, will it eventually work like the Brave browser and the basic attention token?
Yep, it's a fair question. We are talking about various possibilities, and our product side will be better to speak about this. I should say that we're doing our Decrypt reader reward token in seasons that are sponsored by a company in this space, and we're about to go live from the beta, and the first season, once we are live and open it up, is sponsored by Filecoin. So, they're not file coins, but it might give you a sense of, we're talking to the various companies that do this stuff. We're thinking about various interesting options. Eventually, you would expect that the token will be used for something, some kind of value. For now, it's kind of just a fun experimental way to, again, walk our talk, right? To participate actively in this space and to utilize a token and to think about the things that a token might be able to do for journalism. So again, I'd really encourage, I hope I can squeeze this plug in, download our mobile app. It's beautiful. It has all of our news. And that's also where you can earn tokens for things as simple as sharing one of our articles, reading a full article, you get a token. And it's cool. And you see it, go into your wallet. Right now, no monetary value, but we're thinking about all the different cool things we can do with it.
Fantastic. Like I said, I'm going to download that tonight and check it out. Thank you so much for the talk and your perspective on the industry. We definitely need clearly more education in the space. And I'm very happy to see you guys taking that very, very serious. Same thing for us. We do a lot of education and it's a big deal. We're at the forefront of it. We see the kind of gap, this massive gap between this little bubble that we're in and then the rest of reality. and hopefully we can bridge it, or in the future, and improve how human civilization works. But we'll see. Lots of challenges. It's uphill battle. Thank you so much. Yeah. Thank you, Dana. Really appreciate it. Thank you so much. Just drop your contact information if you want anybody to contact you. Just leave it on the chat.
I'll do that.
Yep, great. Thank you, Dan. We're going to have now somebody from Compound, Adam Bavosa from Compound. He's going to be talking about how to integrate with the Compound protocol. Very, very exciting stuff. Hey, Adam, how are you? Can you hear me?
Yeah, hi. How you doing?
Hey, good. I'm well. Thank you for joining us. You are the last talk of the evening, but clearly a very important talk, as well as was all of our other talks today. But we're very excited to have you here today. So take as much time as you need beyond the allocated time, and talk about how we can work with Compound. But before you do that, I would love for you to tell us a little bit about yourself personally, and then a little bit about what your role at Compound is, and before you get into your talk.
Oh, sure. Yeah. Thank you for having me.
Sure.
Yeah, I'm Adam. I'm a software engineer, and I've been working in the startup scene for 5 years now. And last year, I really jumped into from being like a crypto hobbyist to being somebody who's like working on bleeding edge stuff when I joined Compound. So I joined Compound last year, and I've been doing developer relations. So just getting developers the help they need when they're building apps with Ethereum or protocols like the Compound protocol. So yeah, I've been doing crypto stuff for the past few years, and I'm really excited to be in the space. It's like a very vibrant and alive space. There's so many cool new projects and ideas and great people. So it's really exciting place to be, and this is like the perfect time as well in history.
Fantastic. Do you have a slide deck that you want to share?
Yes, I do.
Okay, great. You should have. Yeah, go ahead. There, you have the share button on the bottom. Please feel free to yeah.
All right, let's get started. All right, here is my slide deck. I'm going to present. Everybody can see this, right?
Yes, we can see it.
Great. Well, I'm going to tell you about the Compound protocol and also how to integrate it. So this talk I have is meant for developers, but if you're a product person or an entrepreneur, idea person, that's fine too. You can see the capabilities of Compound. So about me again, I'm the developer relations lead at Compound. I'm here to help you out with your DeFi related development projects. You can contact me on Twitter. I'm just Adam Bavosa on Twitter. I'm also in Discord. If you go to the Compound Discord, you can find me, Adam B. I hang out in the development channel, and I give technical help and also explain concepts for everybody so they can be comfortable with the Compound protocol. And of course, my email is adam@compound.finance if you want to reach out. So I'm going to tell you a little about what the Compound protocol is and why you'd use it, and I'll show you some developer resources. So if you're somebody that writes code, you can get started writing your code. And then I'm going to do a little dev workshop where I show a little basic app of integrating the Compound protocol. So what is the Compound protocol? It is a series of smart contracts that run on the Ethereum blockchain. And what they do is they provide users the ability to get an interest rate on their cryptocurrency. So Ethereum-based assets like Ether and DAI and Wrap Bitcoin, USDC, and a bunch of others, you can earn an interest rate, a varying interest rate, if you mint C tokens. And what that does is it sends your crypto from your wallet into the smart contract that lives on the Ethereum blockchain, and you get C tokens in return. And those C tokens are exchangeable for your underlying at any time. But as time goes on, you can exchange your C tokens for more of the underlying each Ethereum block. So every single block, everyone that is supplied an asset to the protocol, it accrues interest. So supplying your asset to the protocol for just one block, you'll earn a little bit of interest. But obviously with gas fees, you won't be outweighing that cost. So yeah, the protocol allows people to supply assets and earn a varying interest rate. And that interest rate is based on supply and demand. And the opposite side of supplying is borrowing. So the interest that suppliers earned is driven by the interest that borrowers pay. So if you want to borrow cryptocurrency, so say you have a bunch of Bitcoin and you're able to wrap it and make wrapped Bitcoin, you can supply that to the Compound protocol. And then using that wrapped Bitcoin as collateral, you can borrow a different asset, like say USDC. So once you borrow that USDC, you can exchange that for dollars and then use that in your life to pay for something, pay a bill. And you can do that using your Bitcoin as collateral. So that's a pretty cool part of the Compound protocol. That's how it works in a nutshell. It's supplying and borrowing. Suppliers earn interest and borrowers pay interest. So at the time I took the screenshot, there were about $9.3 billion worth of assets supplied to the protocol and a little under $5 billion being borrowed. So here are the currently supported assets. There's 9 of them. They're all Ethereum-based tokens, ERC20s, with the exception of Ether, obviously. And each of them have their own interest rate, and they're all able to be borrowed. The only one that cannot be used as collateral is Tether, that it has a collateral factor of 0. So if you have Tether, unfortunately, you can't use it as collateral to borrow a different asset, but you can still earn interest if you supply it to the protocol. So yeah, that's the protocol in a nutshell. It's all Ethereum smart contracts. They are open source. You can find them on the Compound GitHub. And as of June of last year, the protocol is entirely decentralized. No single party owns it. Anyone can update it. Anyone can make a code change. And that works through Compound governance. So the protocol has 2 governance contracts, and they are the governor and the comp token. So comp token holders and also comp token delegates have votes that they can use to vote on governance proposals. And governance proposals are literal code changes that will be applied to the on-chain protocol. So let's say someone wants to change a interest rate model for a contract. They can deploy an interest rate contract and make a governance proposal that says, let's change this asset's interest rate model to this address. And the community can vote using their comp tokens or their delegated votes and vote yes or no for this code change. And if it succeeds, then it gets applied to the living on-chain protocol. So this is the comp token. This is the symbol of it. You can earn it by supplying or borrowing from the protocol. There is currently for likely about the next 4 years, there's a slow drip of comp tokens to all suppliers and borrowers of Compound, and they earn the comp token as well, and they can use that to vote on governance proposals or create governance proposals. So here's the flow for a governance proposal. Somebody creates the proposal by calling a method on the governor alpha. And voting will become active for 3 days, and the community has the opportunity to vote yes or no during that time. If not enough people vote, then the proposal gets canceled. But if there are enough voters and it succeeds, it gets queued, and the time lock contract is the contract that actually deploys the code. It waits for a minimum of 2 days. For bigger changes, obviously, the proposer gives everyone more time. So if you have an app that uses Compound, you have more time to react and change your app based on the changes in case there's something large that needs to be changed. And of course, when the time lock's done, the code is executed and it's added to the on-chain protocol. So if you go to compound.finance/governance, you can check out the governance dashboard, which shows you how you would vote or how you would be able to see pending proposals, see how many votes you have delegated to you, that kind of stuff. So there's a nice voting and governance interface on the Compound website. And there are a few others out there that are just coming up. Since the protocol is running on Ethereum and it's decentralized, anyone can build their own interface for it. And that's very encouraged. We want to see as many interfaces as we can using the protocol. So here is a cool app that anybody could build. This is something that our team built. It's a leaderboard that shows all of the top voting weights, the addresses with the most voting weight. So all of the folks that have over 100,000 vote weight can create proposals, and everyone else can vote. But also, you can create a proposal if you have 100 comp. You can create an autonomous proposal, which is a contract that deploys a proposal once it receives votes delegated to it. So that's something you can read about on the Medium blog for a little explanation on how to get that going if you wanted to do that. But it lowers the threshold for those that want to create governance proposals. So that's a little bit about Compound governance. I'm sure everybody here, or some of you have seen the announcement about Gateway that came out on Monday. Gateway is a new version of interest rate protocol that is cross-chain. There's a chain that the team is working on that is its own blockchain that will allow other blockchains to integrate into it. So supplying and borrowing can be done across blockchains. So say Ethereum, Stellar, Polkadot, whoever integrates their blockchain into it you can do cross-chain supplying and borrowing. At the moment, it's still in testnet. Team is still building it and working out kinks. First off, they're trying to get Ethereum to work. And of course, after that, it's going to be completely decentralized. If other communities of other blockchains want to add their blockchain to Gateway, they can create a proposal for that. So my demo today is going to be just for the original Ethereum-based Compound protocol. Gateway is still in the works, but I just wanted to mention it in case you all saw the announcement for it, just to say like, hey, I'm not leaving it out. So these are some developer resources. If you want to get started building with the Compound protocol, you can head over to compound.finance. We got documentation at /docs. You can see all the governance stuff, which I showed earlier, /governance. If you want to ask questions or see what's going on in the community, you can come over to Discord. We have lots of Medium blog posts that explain the concepts of the protocol and also some developer guides. If you're building an application that uses the Compound protocol, you can check out our developer guides there. And of course, on GitHub, we have some open source code for developer guides, as well as all of the open source code that is for the protocol itself. So that's at the github.com/compound-finance. So go ahead and screenshot this slide before I continue the next one if you're a builder and you want to get some resources for writing code. So here is a GitHub repository of the little app I'm about to show you all. This is a simple interface for integrating Compound. It's something for web developers to get started. So that's the end of my slides. I'm going to go through the code for that now. So if you head over to this URL, you can see the repository that I'll be working through. So here's my Sublime text. I got the README of the repository. I'm actually going to head over to that. So here's the repo. It's a basic web application, just has HTML, JavaScript, and CSS. And here's a screenshot of it. It enables folks to supply assets to the protocol. So I have the app code here, and I have my terminal here, and I'm going to run a local server so I can run the app on my machine. So I'm going to use http-server, which is an NPM package. So if you have Node.js, you can install this and run a little web server. It's running it in this folder so I can see my HTML, CSS, and JavaScript. So here's the app. I made it nice and big so everyone can see. I'm going to pull up my developer console here, and that's also nice and big so everyone can see. So here's the interest rate app. Basically what someone will do is they'll come to this page and they will enable Ethereum, which will make MetaMask work with the app. And it shows the ETH APY of the current Compound Protocol smart contract. And anyone can supply some ETH, or they can redeem their CETH after they've already supplied some ETH. So we have an error off the bat, and what it's saying is I'm not connected to a Web3 provider. That's because I haven't clicked this button here yet. So once I click this, MetaMask is going to want me to connect, and I'm going to connect to my local host. Oh, it's already connected. Yeah, I already connected to this account. So when I refresh, let's see. Oh, I'm not running my local blockchain. So I'm going to fork mainnet and run a local fork of mainnet on my machine for development purposes. So that's what I'm doing with this command here, using Infura. And so MetaMask is going to hook up to this local blockchain. And now that it's hooked up, you can see that it queried the blockchain to get the ETH APY, and this popped up. It says 0.25%. So if you supply ETH, you'll get 0.25% interest per year on your ETH. Of course, that's a varying interest rate, so that goes up and down. So we do that in JavaScript, and I can pull up app.js. So here's our code. So basically, we grab the supply rate per block, which is a function on the Compound C token contract. And we're using a SDK called Compound.js that I wrote. It is available on the Compound GitHub and also NPM. So you can do compound.eth.read. This will use Ethers.js under the hood, and you can supply an address, an ABI, whether it be JSON or a string. So this is just a one-line ABI, no parameters, and I'm using the window.ethereum that my MetaMask is providing. So I'm getting the supply rate per block, and I can do this little equation here where I know how many decimal places Ether has. I know how many blocks there are in a day and how many days there are in a year. So I can do this equation here to find the APY. So I calculate the APY for ETH, and I put it in that text box there. So what you see here is that equation. And this equation, again, is available in the documentation, compound.finance/docs, if you want to walk through this and understand it a little deeper. So that's how you find the APY. So I am using a localhost Ganache fork of mainnet. And when I use that, I get 100 fake test ETH that I can use locally. So what I'm going to do is I'm going to expand this so you all can see it a little better. So I'm going to supply some Ether to the Compound protocol. Again, this is like a fork of mainnet, so it's not real Ether, but it's good for testing out your application. So I'm going to supply 6 ETH, and I can hit the supply button. Looks like I got an error. Try refreshing the page. That might help. There we go. I got a transaction. I can't make this bigger, sorry. But what it says is we want to mint the mint method on the C token contract, which mints C tokens. So basically you send your Ether to the C token contract, and in return it sends you C tokens, which are sort of like your coat check card for your Ether, so you can send that back later and get your Ether in return. So what we're doing is we're sending 6 Ether to the contract plus a little bit for gas. And when I hit confirm, it's going to mint my C tokens. So when it did that, our JavaScript app logged the Ethers.js transaction object and also the transaction hash. So if we were running on like Ropsten or Mainnet, we could plug this into Etherscan and we can see the transaction getting mined by the blockchain. So now that we've supplied assets, we lost some of our ETH. So now we have 93.99 ETH, but we gained some C ETH. So we have 299 C ETH, and the rate, the ratio of ETH to C ETH is somewhere in the neighborhood of 1 to 50. So if we supplied 6 ETH, we get about 300 C ETH, and it's off by a little bit. And of course, it's always changing so that you'll get more Ether for your C ETH later on. So that's why I now have C ETH. So I can do redeem. This will redeem my C ETH, and I'll get Ether back in return. So if I'm going to redeem some, I'm going to do 100. So after I hit this, I should have 199 C ETH, and my Ether balance will go back up. I hit that, and this time MetaMask is saying we're going to redeem. We're going to spend 0 Ether for that, but there's a little bit of a gas fee, so it's a little more than 0. So I'm going to confirm that. Our console got that Ether's transaction object again and a transaction hash, and took a few seconds, but in MetaMask we see I have 199 C ETH, and my Ether went up from 93 to 95 or 96. So all of that ETH that was in the protocol, I gained a little minuscule amount of interest in the minute that it was in the protocol. But of course, if you leave it in for more time, you'll gain more interest. So that is how this app works. Of course, there's a function for supply. It's using Compound.js. Compound.js has its own supply method. So you can initialize a Compound object using the Web3 provider. And then you can come over and supply, and you say which asset, which in this case was a string, just ETH, and you can say the amount. So we put it in our text box, and then we grab it when we try and supply. So here's the supply call. From when we click on that button in the user interface, it'll take that amount from the text box and use the supply method. And of course, it logs that transaction hash and Ethers.js object that we saw. So that's the code for creating a interest rate app for supplying Ether and earning interest. It's pretty straightforward, pretty simple app. It's only 67 lines of code. The GitHub repository has the ability to use ETH, but I also made a second branch to support USDC. So using the Compound protocol with Ether is slightly different from all the other ERC20 tokens. So this ERC20 way is slightly different, and I'll show how you would integrate that yourself. We would just basically, I could merge this pull request and see the code, but I'm gonna write it out for you all. So I'm gonna go over to our HTML. We're gonna make a second widget. So this is our Ether widget where we were able to input Ether amount to supply, but we're gonna change it to USDC. All right. So now when we check out our app, we should see a second widget come up when I refresh the page. Yep, we got a USDC here. It does not have an interest rate because we did not write the JavaScript yet. I'm going to do that right now. Head over here, do a little copy paste. Let's see, get all the elements for ETH. We're going to do USDC. Nice. Okay. And we're going to need a supply and redeem button. So we'll take our Ether ones and we'll copy them. We'll do USDC. Okay. Yep. And then the last part we'll do is when we refresh the page, we want to be able to see the APY. So we're going to do USDC APY. All right. That's it. I think that's all the code that we need to change. So let's make sure we got an APY here. What we want to see is what we'd find in the Compound Finance Markets page. So you go to compound.finance/markets, and we head over to USDC. We see that the current supply rate is 6.92%. So when we refresh this page, that's what we should see here. Little sanity check for us. Yep, we got it. Okay, 6.92% for USDC APY. Awesome. So let's head back over to here. So I don't have any USDC on my my local fork, so I can actually mint some because I'm on testnet. I can do whatever I want. So I will come over to a script that I use in my supply guide. So if you head over to our GitHub, we have a guide for supplying assets to the protocol. There's a Medium post as well. I have scripts for seeding assets. So each of these assets are supported by the protocol. I can come over here and run this script, and that'll send me some USDC that I can use. So I'm going to make a new terminal window. Okay, get that a bit bigger for you all. So basically, I'm just going to run this script we have over here. So I'm going to do node seed, and we're going to do USDC. And so when that runs, it's using my localhost testnet. I unlocked the USDC address when I ran the command here. So this address here is USDC. It's unlocked, so I can steal USDC. I got 50 of them. So when I go over to my wallet, I should now have 50 USDC. Awesome. Okay, so now I can use it in my application. So we're going to do the same thing we did before. I'm going to supply 14 USDC. And I'm going to have to do 2 transactions this time. So ERC20s require you to approve the token transfer before you transfer, unlike Ether where you could just send it. So the first transaction is approving. So I need to wait for that to finish. And okay, once it's finished, I can do the mint operation, the same thing we did before, where we're sending 14 of our USDC. There's a little bit of a gas fee. And there we go. Here's our transaction hash. All set. So this number should go down, and we should see some USDC go up. Oh, there it goes. We have 645 CUSDC, and of course we can redeem it. So if it's in protocol for more than one block. It earns interest, of course. So I'm going to redeem 500. And here's the redeem function. So that's going to take my CUSDC, and I'll get USDC in return. Okay, we should see this number go back up. There we go. We got 46 USDC now. Some is still in the protocol. We got our CUSDC if we want to redeem it later. So yeah, that's my little code walkthrough of creating your own interest rate app with the Compound protocol. Of course, you can head over to that link I showed in my slides. It's github.com/ajb413/compound-DeFiCon-2021. That's right there. So yeah, that's my code walkthrough. I hope you all enjoyed it. I'm happy to answer questions now.
Okay, fantastic. Thank you so much, Adam. So we have a mix of business people and technical people in the audience. Just so for the business people, we will have Compound coming back tomorrow at 4 p.m. Eastern. We have Nick coming in talking about the protocol at a high level. This is a little bit more of a technical overview for those who want to integrate the Compound, whether you're a trader and you want to build a trading app and things like that, and you want to get the data and you want to get the rates. This is kind of the way to do it. So Adam, thank you very, very much for that. It was fantastic. We do have some questions that came up. One of the questions you mentioned that Tether can't be used as collateral. Do you know why that's the case?
Yes. So the community decided to add Tether to the protocol for earning interest if you want to supply it. However, the community found that Tether doesn't have the best reputation in terms of using it as collateral. So in case there is some sort of Tether collapse, we want to avoid that risk in the protocol. So the community as a whole decided to vote on the Tether collateral factor and make it 0. So that way it can't be used as collateral and make some sort of like house of cards with borrowing assets. So that's the main reason.
Okay, so it's basically a risk management decision to not to include it. Okay, great. Okay, and if developers are looking for additional Compound APIs, what's the best place to, if I want to start to put up money in, lend and borrow, what's the best API approach to do that? I know you have some REST APIs, is it true that a borrower, I'm getting somebody DMing this question, is it true that a borrower, depending on the price of the comp token, can end up ahead making money?
Yes. So if you're borrowing and the distribution rate of comp is actually exceeding the interest rate for the borrow, then yeah, of course, you could actually borrow and have a positive interest rate. The app at app.compound.finance, you can use that for supplying and borrowing. You can see that there's a net interest rate at the top. So yes, in some scenarios, when you're borrowing, you are still a positive net interest rate. That is possible.
Okay, and then the first question is the raw APIs do you have REST APIs that can be used by developers to get to the rates? Sure. We'll get information on that.
Yeah, the Compound Labs team has a REST API that is used simply for getting data. It is not for submitting data, so you can't supply or borrow using the API. However, you can fetch things like interest rates. You can see an account's balance, their collateral. You can see governance data, like how many votes an address has, how much comp token an address has. So that REST API is available. The documentation is at compound.finance/docs, and there's a tab at the top for API, and you can check it out. It'll tell you how to use the REST endpoints there for fetching data.
Okay, great. Fantastic. Okay, thank you so much, Adam. I appreciate your time. We are close to the end. We are actually at the end of our allocated time. Compound will be back tomorrow. Tomorrow we have a full slate of speakers. We do have Compound coming back, and we have early in the morning. We start off at 9:30 in the morning with Lisa Tan from Economics Design. It's going to be talking about DeFi, traditional finance versus DeFi, a little bit around what was done by Clemens, but it's a completely different perspective. We have Alpha Finance, we have Harvest Finance coming, we have Gnosis, we have Aave, we have Cream Finance coming and talking about their protocol, PiDAO, Chainlink as well, DYDX, and we've just confirmed Yearn will be joining us on Friday. So we've got a heavy schedule tomorrow. I look forward to seeing you guys all come by tomorrow to continue our conversation on DeFi. Okay, fantastic. Thank you, Adam. Thank you, everyone. Hope to see you guys all tomorrow. Thank you.
Thank you.
Have a great evening from New York.